All right. So we're going to skip over all the fundamentals and general charting for the market, but it's important to know that right now everything is looking weak. There's no reason to think the macro is going to slow down. We're in a really strong downtrend, and the thing with these types of downtrends, when you're on a weekly time frame, they typically accelerate once you hit a certain level. And everyone was thinking 20,000 was going to be that level where participants start stepping in, and they actually hold that level. But it was an arbitrary number and an idea that was never tested until this cycle. Just because it was the cycle top on the previous cycle doesn't mean that we're going to hold it. We haven't even tested it. So if anything, it's a weak idea, and until you've battle tested a certain support area, you can't call it support. So that's why when people talk about abstract ideas like the 200 SMA is going to hold as support, or 20,000 previous cycle top is going to do it, they don't know what they're talking about. It's all hopium, all copium. They're just trying to grasp at straws, and basically they have a usership bias, or they have an idea going in, and what they're trying to do is just grasp at straws and validate whatever they said. But no one knows where we're going. So the idea is to just let the trend go in whichever direction is the path of least resistance. And when you get a final capitulation, or you get a signal that people are starting to flip from distribution to accumulation, that's when we're going to start jumping in and buying. So the idea is I've broken this into layer 1s, layer 2 gaming, NFT. The whole concept is to have good exposure to every segment of the market, and then to diversify so that you're not overly invested in, say, L2s, and then all of a sudden a whole new mechanic comes in and the whole market shifts to modular blockchains that are combination L1 L2s. If you're all in on an L2 and that's the only, I guess, utility they provide, then you're gonna get into a losing position. So the idea is to be diversified and have exposure to every single segment, and then to create a hierarchy of which narrative you think is going to get traction in the next run. So, crypto freeze, ja ja ja. Oh, dude, the excitement, man. This guy. Okay, things just got leveled up. Welcome, my man. All right, so we're gonna start with, I guess, my thesis. What I'm looking for, what we're using as guardrails for this process, is crypto as a whole tends to be narrative driven. A lot of these protocols, they're pre-revenue, so you got to treat them like a tech startup that is pre-revenue, and they're trying to, I guess, get user adoption and then have that network effect down the road, and that's when you get this exponential scaling with their trajectory. So the way you invest in these narratives, you got to look at which narrative you think long term and in the immediate term are going to catch on faster and outperform the other narratives, right? So if you think move to earn is going to be the big one, then you run with that. If you think a modular blockchain is going to be the next narrative, then you run with that one. But the idea is to rank it by hierarchy and then allocate more to whatever the narrative is you think is going to outperform. So then I'm going to start with layer 1s. The first one that I'm really bullish on long term is going to be Oasis Foundation, Oasis Network. So the idea is they have a competitor with Polkadot. They're both modular chains, and Polkadot uses the parachain mechanic and parathreads, where you basically they do a crowd loan, and then based on what the people decide they want to allocate toward, they then decide which protocols are going to be awarded the parachain. So Oasis is slightly different, but they use a modular chain, which is more efficient. The idea is they have a consensus layer, and then they'll have a paratime layer. And the paratime layer is more of the privacy core for the Oasis network. So I think one of the big narratives that I'm focusing on when I'm trying to allocate on the dump, or whenever we eventually capitulate, is I think privacy is going to be a big deal. The way things are going, in the world in general, there's a general distrust of government and just government overreach, and how our privacy and data, all our metadata, is being monetized without us, right? So I think platforms and blockchains that adopt a component of privacy are going to do really well, which is why I want exposure to an L1 that is focused on privacy. So Rose is going to be one of them. And again, they're a direct competitor with Polkadot. So whether you go with Polkadot or Rose, I think you're achieving the same end result, right? You're getting some exposure to a decentralized chain, and more privacy focused with Rose, I would say. Again, they're focusing on data tokenization, which is going to be effectively the core of Web3. And one of the other things I look for when I'm investing is where the big money is investing. So follow the money, right? And with Rose, they've had substantial investments from Binance Labs. They've invested a $200 million into the ecosystem fund. So it shows that they have skin in the game. And when you have a behemoth like Binance putting money behind a protocol, it's likely to have a big enough war chest where if we go into a prolonged bear market, they can still afford to pay devs, because devs don't work on, they don't live on Dogecoin, right? They can't eat Dogecoin. They need money. An average dev, you're going to have to pay them, 60,000 USD minimum to get a reasonably good dev. And then cryptographers, you're going to obviously have to pay them more. Data scientists and engineers, you're going to pay them more. But the idea is you need a war chest, and you want to follow the companies that have mega funding and ecosystem funding. So that's a big one. The other thing with Rose, they have a partnership with a Fortune 500 biotech company. So that's Genetica in Vietnam. And Vietnam, if you look at the data, they're actually the most progressive country in terms of crypto adoption in the world. So they're ranked number 1. And then you get some other countries you wouldn't expect in that top 20 list, like Afghanistan is number 20. But then when you really, when you investigate why, it's very obvious. Afghanistan is destabilized, property rights are null. You can't claim that cave. So the idea is, if people are fleeing countries that are destabilized, they want to have a form of digital currency they can access anywhere they go, whether they're a refugee in Canada, whether they're in Germany. Doesn't matter where they flee to. They want to have access to whatever property rights they had when they left the country. So that's why you get countries like that adopting crypto. But the idea, I'm rambling, but the idea here was Rose has a partnership with Genetica, and it's backed by the Vietnamese government. So for me, that's a really strong signal that, if you get the most forward crypto country and their government is behind it, and you have a Fortune 500 biotech behind it, that's usually a good signal. So the other one is obviously Meta, right? So when they announced the Facebook or Meta partnership, and that Meta is going to be building on a privacy blockchain, it was already speculated going into it, but then they confirmed. The idea is, everyone started to distrust Facebook, thinking that their data or their metadata is being monetized, right? So when you do Facebook ads, you're basically targeting on postal code, interest of whoever you're targeting, and they've eliminated quite a few of them. But the problem is, it's sticky. People still have that impression that they're being used for their data, which is not a good feeling, right? Like, you're not getting anything in return, but you're basically giving them a target or a bullseye to really target you with ads and things like that, and then basically extract money out of you. So I think they're making a big effort at Meta now by building a privacy blockchain to tell the world, look, we know that we fucked up. We're making it better now because our blockchain is built on Oasis protocol, and that's privacy blockchain. So I think that's going to be a big push. And when you add to the equation the fact that they've rebranded as Meta, because they are going to be basically leaving their 2.0 concept, which was Facebook community sharing and that sort of thing, and they're going toward metaverse where people are going to live and engage online, and that's all we're ever going to do. We're just going to be like at home all day doing nothing, working online. Like it's pathetic. I don't want to be a part of that world, but that's the way they envision it. So with that rebranding and basically like a fresh start to them, they want to probably create this persona of being private, decentralized, but they're not. Either way, it's going to be newsworthy every time there's an announcement. So I think even if Oasis protocol doesn't do much in terms of revenue, they're gonna have a lot of newsworthy headlines, and that's gonna push price. And again, this is all a Ponzi, right? Until you have established revenue, this is all a Ponzi. You're betting on the narrative, nothing else. And there might be like 4 or 5 blockchains that make it, but for the most part, it's all going to be vaporware and go to zero. So that's the other big use case. Again, they also have, Oasis has a $250 million in their war chest for developers. So the way I interpret that is they're bear market resistant. You know, they have enough flow where they're not gonna be obsolete like all the other protocols that went extinct in the last cycle. Having a war chest and having VCs is a big deal when you go into bear market. From what I understand, I wasn't around in 2013 or any of the previous cycles. This is my first proper cycle, but I have a lot of buddies that have been around since 2013. And you can check, like you can go in the Wayback Machine and check, or you could go on CoinGecko and CoinMarketCap, and you can see how many of those old protocols from 2013 just aren't here. You know, there's very few that are still around. But the idea is you want to have enough in the war chest where they can survive and pay for development and build during that bear market, because that's when a lot of the big projects are developed for the next cycle. So let's see where that goes. But yeah, 250 million in their ecosystem fund. They also have an EVM compatible paratime layer. So the idea is, you know, with the Ethereum virtual machine, they're going to be able to plug in kind of the same way with Polkadot they're doing the parachains. The gas fees are going to be 99% less than on Ethereum. So again, that's a very big pain point for people that are buying NFTs on Ethereum. And you don't notice it until the market goes full bull, right? So the idea is right now it's going to be very cheap. No one's really, I mean, not cheap, but relatively inexpensive compared to when we're in full bull market, right? The idea is when everyone's using the chain, it's going to slow it down, and then your average gas fees are going to go up. So apparently, you know, I haven't used Rose, so I can't confirm, but 99% less gas fee. We already went over the privacy narrative. Major investors, again, that's another signal I'm looking for. Andreessen Horowitz invested in them, Polychain, Binance Labs, and BMW Group. So not only you have crypto native funds that are investing in the protocol, but you're getting TradeFi and even, you know, companies that don't even have exposure to hedge funds or like investments and that sort of thing. So BMW Group is more of a partnership, but they're going to be partnering with, you know, traditional infrastructure, like stuff that already exists off chain. So I think that's a big way to bridge people on chain, right? If you want massive crypto adoption and you want the market cap to explode above 3 trillion, you're going to need to bring off-chain elements on chain. So that's something I'm looking for. And with BMW Group, they're obviously going to be doing some work there. I know other companies like IOTA are doing that, and there's a few other ones, but this one kind of stood out. And again, they have Arrington Capital and Pantera behind it. So they have basically a who's who of top tier VCs, and they have a lot of money in the war chest ready to go. So I'll just show you real quick. Here's a piece with BMW, differential privacy. So basically everything is going to be, all their user data is going to be stored on chain and decentralized. So like Equifax reports credit, and they've had a breach in the last year and a half where basically everyone who subscribes to Equifax or the credit reporting agency, their data was leaked. And this kind of exploit can be a big problem. So I think with all the breaches happening in the last few years, I think BMW is smart to do this, and you're going to see companies, at least the big companies, are going to start rolling their data and user info on chain, because I think that's going to be a safer way to do it for them. So I have a bunch of articles. Again, you'll get the slide deck after this. I'm going to post it in the free chat, but for now we're just going to go over the visuals and get through it. Here's the other thing I was talking about with Vietnam and the biotech company. And sorry guys, when I'm recording on my computer, it's always slow for whatever reason. But yeah, this is a strong vote of confidence. You have the most crypto forward countries' prime ministers supporting their blockchain, and then you have a Fortune 500 biotech company behind it as well. So they're going to be putting genetic data on chain, and I think that's a big deal, because like when you do these 23andMe, you're sending it to a centralized structure where basically they have your genetic data. So I mean, if you wanted to, like, I'm always thinking doom theory, worst case scenario. Let's say you have a genetic predisposition to Alzheimer's. So you have an ApoE40 gene, and that makes you more inclined to develop late stage Alzheimer's. If you give that info from your genetic material to a centralized company, and they have this info going in ahead of time, if they wanted to leak it to your insurance company and say, well, look, you're insuring this guy for nothing, he's very likely to get Alzheimer's within 20 years, I mean, that could be exploited, right? But if you put it on chain, that's a use case where it can't be exploited. At least in theory it can, right? You can always have brute force attacks, and there's always something that can be done, but it's less likely to have an exploit on chain. So that's another major use case. So that's the first protocol. Here's the unlock schedule. Very important when I'm researching, I always want to look at what upcoming unlocks are going to happen and what net sell pressure that will create, because I don't want to buy into an unlock and then everyone, all the early seed investors and advisors dump on my head, So here's the unlock schedule, and you'll get this in the slide deck as well. And you'll note that it's a linear schedule, very predictable. They had the big major unlock a month ago. So I'll go into my capitulation buys here. Here's Rose. So if you look at the next 12-month schedule, this started in May, right? So we're, this 1 month forward, but the idea is within a year, T minus 12 months, there's going to be 1.5 billion tokens unlocked, or 15% of the supply. Because it's every 2 months, it would be good to know that on the 19th, around there, you want to basically be out of a position if you're swing trading it, and you don't want to be in the market holding whenever those major unlocks happen. Because if suddenly there's 910 million new tokens floating around, they could dump those and then the price will be affected right away. So their last one was on May 19. It hasn't really affected the price, but again, it was already going into it. I think everyone from here to here front ran it, right? So they knew May 19th was going to be a big unlock. So I think everyone noticed here it started to look very distributive from here to here to here. Like this is all distribution, right? So I'd imagine because this is a major VC token, so if you look here, Masari reports every quarter which VCs, sorry I can't zoom in more there, but basically they report which tokens VCs carry the most, so the most highest volume they're holding. And you'll note here Rose is number 2, so it's behind Polkadot. They're 1 and 2, and then you get all these shit protocols all the way down except for maybe Near. Mina's good in theory, Avalanche is okay. The rest of these are pretty trash. So I mean, come on, internet computer, dude, what are these clowns they need Giga to take over their hedge fund, man. But yeah, brutal. Anyways, the point is when you go into major unlocks, expect something like this leading into it. So if we go here to here, 17 days people were distributing on the way down. So they anticipated and they front ran it. And then the week prior, you see it kind of flatlined over here. And again, it's the cause and effect isn't one-to-one. This could have been just because BTC was crumbling, right? So the idea is it's very hard to segment out or tease out whether it was the BTC price action that affected it like that, or it was because VCs or like big wallets were trying to liquidate going into a major unlock. But the idea is either way, you just want to be safe going into them. So the next big one is going to be July 19. So what I normally do, if you guys want to do this on your own chart, is I'll do a vertical bar right there, July 19, and then just add in major token unlock. And then I'll even put in the volume, so 910 million, I believe. Yeah, so 910 million. So just be aware of unlocks. For me, that's like a guiding principle. Once I like the protocol, the next thing I want to verify always is how exposed am I to a major unlock where I could effectively being dumped on or being treated as exit liquidity. So here's the other details. Here's a side-by-side chart just showing the major L1s by comparison. You could see Oasis totality is a lot quicker than Ethereum. It's 3 times slower than Avalanche, and it's on par with Polkadot. And then you can see all the other details: privacy, scalability, smart contracts, versatility. It's got, I mean, this is fluff, versatility. Stupid. But privacy is the big one. That's like if you want a private blockchain, a blockchain that is natively private, then that's what you want. So I think decentralized apps are going to really start building on the Rose blockchain. And then the more dApps that get built on the blockchain, the more TVL gets locked into it. And then you basically extract the most value that way. So if you think there's going to be a migration to a privacy chain, then your best bet would be to bet on that privacy chain, whatever has the most exposure, and that would be Rose. So I'm not going to beat this to death, but again, it's the number 2 most held crypto asset by VC funds, and that's recent from June 14. So that's the first one. Next one would be Near. By the way, I'm not including Bitcoin or Ethereum on the list just because I think everyone going into, one sec. So everyone going into a capitulation or, going into a major drawdown that we could very easily be going into now. Like, to me, 20,000 is looking pretty porous right now. But let's say we end up having a capitulation and then people start accumulating at a bottom. My theory is it's going to be in 4 digits. It's going to be just wicking below 10 grand. If that happens, the first coin everyone's going to crowd into, the first 2 coins are going to be Bitcoin and Ethereum. Most likely Bitcoin. But like for instance, my buddy on the last cycle, he put everything into Ethereum when it hit $80, and that's literally the only trade he had to take for the whole cycle. There was no need to complicate things. The idea is to just move with the masses. So if everyone is thinking, like if you have a hive mind and all the big wallets are going to crowd into Bitcoin and Ethereum on that first capitulation wick, then that's where you want to pull your money into on the first major dump, where where you see an accumulation structure forming. So before you even consider these L1s, I would like, the caveat is your first trade coming out of a major drawdown is going to be Bitcoin. Like for me, I'm basically putting 100% into Bitcoin, and then I'm going to watch how it behaves relative to the ETH BTC pairing. If I see ETH is outperforming BTC after that first reflexive bounce when it capitulates, then what I'll do is I'll reallocate a higher percentage to ETH, and then that way you're following the crowd. You're not being a contrarian and getting fucked when you think you bought the bottom on near, but near just keeps drawing down because there's an over allocation into the main 2 coins and nobody cares about near, so people are still getting out of near positions to funnel it into Bitcoin, right? So that's the only caveat. But once that's done and you start getting an accumulation structure that's forming upward, so we're going up and to the right, that's when I would consider rows and near. And near would be the second L1 that I'm going to look at. These levels, by the way, don't worry, you don't have to screenshot them or record them. It's going to be in the slide deck and you'll all have access to it. So when I say here, entry 1 on rows is going to be 3.4 to 3.1, or we'll go to near. Entry 1 is 188 to 154. So if I go into near, see, I've already drawn out my support zones. These are reactive zones where you've had impulses off of them, right? So the idea is here, this box right here, at 188 to 154, was after we had a pretty substantial run up, an M-shaped structure, which ended up being a bat, a version of a bat, which is a harmonic, and then it drew down to the 886 fib, and it held here, and that was an inflection point which sent it on a parabolic run. So for me, this zone is going to be a price reactive zone if we draw down to that level again. At the very least, what you're going to get is a reaction. Like, it might not actually be the final bottom, but what you'll want to do is look for, like right here we had class A bullish divergence, right? And there was other volume metrics and volume profile that were showing that this is an area that you might want to take a risk on or roll the dice. So if we revisit that area here, I would imagine it would react. Like the one zone we bounced off right here, I already had this drawn weeks ago. That just goes back to this zone. On our first impulse up, on wave 1 here, we back tested it, and that giant wick here ended up defining the lower bound of that reactive zone. And then from there, it basically used it as a springboard to break into the next zone and then consolidate. And then it essentially did a triple top. But even if you didn't see this, the fact that it bounced over here, even if it was, just a moment in time, and this doesn't end up holding long term, but what it did have a reaction there, and that's because of what was created here and here. So even here, it back tested the upper bound. You could see when it finally double bottomed here with class A bullish divergence, it worked its way up, jumped the creek over here, and then it back tested it just to give participants assurance that this upper bound was in fact support before they started to pile in with larger size, and then it ran up. So it did the same thing here where it basically decelerated. You see the wicks forming, but this was a really weak bounce, right? And then I don't know how much it went up, but yeah, nominally that's a pretty good bounce, 54%, but this is not a bear market rally. Like, this is piss. This is not a real move. If you want a real bear market rally, you like, considering how much we've drawn down, that small, look at, when you zoom out, that move was nothing. This right here compared to this drawdown. Leading into it, we drew down 85%. And yeah, respectively 51%, that's 2/3 the run up after the drawdown, which is good, but it's still nothing. Like, imagine it got to this zone. So if we mark it in from here to here, that's a 350% run up. That would be a crazy rally, bear market rally. So anyway, I don't want to focus too much on it. You're going to have links to the chart as well in the slide deck. I'm going to be adding them afterward. But the idea with near, this is an area that I would roll the dice on if we capitulated 188 to 154, because where we are right now, that would basically bring it to here down. It would drop the price 54, 55%. And I think that's reasonable. The other thing I was doing for all the analysis, the chart analysis, every cycle on BTC ended at the 886, and it was coming off a two-wave harmonic structure that was either a bat or a shark, very specific wave structure. And they closed at the 886. When I put the cycle 886, this is just like an annotation showing you where typically participants would see value at that level. But we've already breached it over here. So when you see it in the chart deck, ignore this. This is just a reference point, or like a benchmark for value. If we're below it already, that means that there's obviously a lot more sustainable drawdown to come, right? So just be aware of that. The other details within each metric I'm tracking. Important to note, if this is your first entry into near, which would be essentially this reactive zone right here, what it does is it gives you a very clear area where you can invalidate your trade, right? So if you entered there, that's an area of value, but what you would do is have a stop loss below it, right? And it doesn't have to be so close to there, because a lot of the time bots will just target all the stops and flush everyone. So what you could do, assuming that this is during the hours you're awake, and it's not like you're in New York hours, but it hits this level in Asian hours or whatever, and you're not awake, or whatever time zone. But the idea is, if you're awake, I don't even set my stop loss. I'll manually stop myself out. So I'll just watch the price action as it bounces in the zone. And if I see any break of structure or moment of weakness, I'll just pick my stop and then manually stop myself out. If it's overnight and you enter a position, or you're catching a falling knife because you've put your limit buys here and we're here overnight, and then while you slept, it just knifed in, then you got to be aware that if you bought it before you went to sleep, what I'm saying is then you should have a stop loss right here below your invalidation. Because if it falls from here, what it's likely going to do is jump into this zone, which, if you open the VPVR, the volume profile suggests that's where it's going to have a lot of activity. So you see right here, this is where everyone jumps in. Thin order books here, not many people participating. It beefs up a little here, major volume here, which is why we caught a reactive bounce there. But the lion's share of the volume trades at this level, 118. So that's why I've marked it in the chart. Because if we do break below here, you want to get stopped out and avert losing more of your capital from basically this level. If it breaches, it'll go right to here at 45%. So you want to get stopped out quick and early right here, as opposed to not having a defined stop or invalidation point, and then it goes to this level, and now you have half the capital that you entered with. So that's like a very important detail that you should have an invalidation level and you should have a stop loss if you're catching a knife or if you don't have a proper accumulation structure yet. And you can manually do it, or if you're going to go to sleep before you crash that day and you're going to leave your trade open, make sure you have a stop programmed in. Then the idea is you just buy at the next level, 117. So if it does break through and go into the next zone here, then you basically have your volume profile suggesting a lot of people will participate and roll the dice here. And then you could basically, you shouldn't be contrarian. You should be entering positions with the rest of participants, right? So the idea would be to enter there. And if it doesn't hold, which it should, because you could see here 1, 2, 3, and then it even back tested it before it ran into the next reactive zone. So the idea is if it doesn't hold and it's just such piss poor price action overall for the market, stop yourself out, and then you have another level here, 67 to 54. And every level that you try to enter your long-term positions on, you should have an invalidation number as well below and stop out. And then here's your entry 3 that I just mentioned. So not every one of these has a third entry. Some of them only have one logical entry, right? And then after, if it violates that entry, you stop yourself out and then just be on the sidelines. But then I've also added in here exit 1, exit 2. So based on these based on these reactive zones, the zones that I put in for exit 1, exit 2 assume that okay, the market's stabilized and now we're potentially flipping into accumulation in preparation for either the next halving or the next immediate bull run. So then those would be zones where you would want to sell with the crowd and not go against the crowd. So that's what the exit 1, exit 2 were going to be. We also identified the all-time high, and the idea behind that is you want to understand what your max upside is, assuming you snipe a really good early entry here or here. So the way I'm using this mechanic in the slide deck, I'm taking whatever the all-time high is and I'm dividing it by my absolute lowest potential entry. So that number is going to be inflated, like it's not the conservative number. If you want it to be conservative, you would take the all-time high and you would divide it by the highest entry one, and then that max upside would be far fewer X's, right? But this is just a guideline. You guys can obviously chop this up any way you choose to, but it's a good starting point if you're going to try to understand where the good entry would be. The other metric I'm using in this analysis is private price. So I want to know, either based on the IDO price that the public got, participants like you and me, retail, or seed investors, which is like early private prices, they got preferential pricing compared to the IDO. So I've identified whether this is a private or seed price, or if it's IDO or IEO, which is extended to retail plebs like us, right? And what you want to do is you want to take the rock bottom price of private entrants or people that got it for the cheapest. So in this case, Near had a pretty big range because they had multiple rounds. So the idea was the earliest investors with the most preferred pricing got it for 3.7 cents. And then on the high end of the spectrum, 32 cents they entered. So even at 32 cents, they're 10x up from where we are now, which to me as a metric suggests if the bear trend continues and people keep drawing down and unwinding their positions, there's still going to be a lot of net sell pressure. They're still 10x up from here down to here, 3 cents. So that's still a 98% drawdown. You don't want to enter, like if you put in $1,000 there, you're going to be left with what, like $20 at the end of the day? It's crazy, man. So here, 3 cents. So that's like the bottom price. Like it's still 8,700% to the top. So just know that there's still a lot of potential net sell pressure on the way down. And especially because you have companies that got caught up in the Luna fiasco. So there's a lot of contagion with Three Arrows Capital. They're also pretty substantial investors in Near. So if they still have a position that hasn't been called in to pay for their debts and all the bullshit, if they still have a position to unwind, then you got to be aware of whether that token has exposure to any of these failed crypto hedge funds, you know? So this is one to look out for, and why I'm suggesting the price, even though it looks strong over here, can still draw down sizably to our proper entries over here. And I think I'm more inclined to, like, I'll be more excited about these two entries, and I'd still be, if I'm being honest, I'll still be a bit nervous over here. So be aware of which company has exposure to any of these VCs that screwed up on this cycle, and still there's going to be a lot of them that haven't even come out yet. There was a guy, what was his name, Richard Veer, that had Bitcoin Cash. He had like massive exposure. It just came out like today, and now he's illiquid. He has to unwind his position. So every few days we're getting a new entrant into this like unvirtuous cycle where people are just unwinding positions and getting liquidated or margin called. So that's going to continue, which is why you need to know who's invested in each of these protocols. The other metrics I'm looking at, these are the last ones. I'm looking at circulating supply versus the total. And what I want to avoid is, I want to avoid low flow, where basically you have only 5%, 8%, 20% of the circulating supply out from the total. Because if you have a very front-loaded tokenomic structure where they're allowing VCs to dump on a linear schedule like 10% per month for the first year, that's going to put immense pressure on the price action, especially if we're already in a downtrend and they got to buy in at 3 cents, 3.7. So what I'm looking for is any projects that I can snipe in the bear market that already have a lot of circulating supply, and or they have a very long-term linear unlock that I could define. Because a lot of these bullshit protocols, they don't even publish proper tokenomics. You probably noticed it. Like they'll put up very obscure tokenomics schedule. Nothing is clearly defined. I like this one. Near is very clearly defined. So if you go into it on Masari, they posted one it's interactive. So it has a liquid supply curve that's showing you basically your steepening of the cliff. I mean, the slope is diminishing as you go up, right? But the steep part of the cliff ends over here in December this year, and then you see it flattening out from there, right? But the idea is when you have that massive sharp slope leading into it, that means the front-loaded sell pressure is going to be high, and then it's going to be more linear as you expand. But when you roll over each month, you could see in that little pop-up an annotation of who's getting the distribution, like what percentage is going to early ecosystem, foundation, core team. This is a proper tokenomic structure. This is clearly defined. You can work backwards with this and understand what the net sell pressure will be long term. Whereas you'll get some projects that just don't post proper tokenomics, or they revise them so many times that it just confuses everyone. And that's by design. It's to basically rattle retail so that we don't have clearly defined tokenomic structure, and that we get caught up when there's a distribution or when vesting is unlocked, and then the VCs and early investors get to dump on the market, on the open market. So I want to get anything that has high circulating supply. I want to avoid low flow. And ideally, you want something with a total supply that is low, right? So you have some projects like Trias, I think has, hold on, I think I closed something here. Like Trias has really low total supply, right? So if you go into CoinGecko, this is how you would do it. for anyone new that hasn't played with tokenomics. So here's TriS, and right here's your total supply, only 10 million, and they've got 50% out already. So it's a very average float compared to, let's say, Near, that's at 75% float right now, which is good. But the total supply is so much lower. So you gotta identify what's the unlock schedule. How aggressive is it? Like, are all 10 million gonna flood the market in the next 6 months? Or is that over a 10-year period? And, you know, or is it like lump sum every 6 months, a big amount is gonna go onto the market? And what I use normally for that, for anyone that's curious, I go on Crypto Rank. And then you just basically type in whatever asset you're trying to research tokenomics for. God, this is slow, man. Anyway, you get the picture. Just go in there. Holy shit, what's going on, man? It's like my computer's frozen. Yeah, it's a bad example. So then once you're in whatever asset that you're investigating, you go into token sale, and then you'll see here the price, the round, whether it was a private pre-sale or it was ICO to the public, you and I, or if it was a seed sale where they got preferential pricing. And then what you want to do is identify the absolute lowest price, how many tokens were allocated to them, and then work backwards and try to figure out how much strain is that going to put on the open supply, and then what the unlock schedule is. So you can't look in isolation at what the circulating supply percentage is or what the total supply is, like the nominal total supply, because it's a function of how fast those tokens are coming into supply, but also what is the nominal, I mean, what is the real change month over month in terms of sell pressure. So I always use like a combination of those metrics to figure out what I want to jump into. And I think with Near, because it's a 1.2% linear monthly unlock, and then I define the exact nominal amount, 11 million tokens per month, based on total supply, it's very reasonable. 1.2% additional sell pressure per month, assuming a regular adoption curve where there's more more apps being developed on the Near blockchain, more TVL, more validator nodes. As all the adoption curve starts growing, this additional supply will be trivial because the demand will outweigh the new supply. So it'll be a very manageable linear unlock. So that's like another thing to look at. If you believe in the fundamentals and you think it'll get adoption, then that would be another metric to watch. The reason I like Near is it already has sharding. So Ethereum's been talking about it forever, but they still don't have it properly implemented, and they still haven't launched ETH 2.0. So it feels like they're moving, they got too big too fast, and now they're moving too slow to avoid, you know, creating busted smart contracts and like a flawed conversion to proof of stake. So it's very key distinction, I guess, between the two. And by the way, if you want to learn more about sharding and ZK rollups, ZK proofs, what you could do is go to Vitalik.ca. This is Vitalik's personal website. He basically, it's like it's a thought dump for him, like his little journal of how he sees crypto evolving over the years. And then, you know, he's a thought leader, right? So everyone rips on him or fades him because of how he dresses, right? Or like, this guy's in charge of my net worth, all that shit. But he's like a real thought leader. Without him, there's no Ethereum, there's no Uniswap, there's no like progressive adoption of DeFi. So you could fade him all you want. He's a thought leader. So I think this is a very good website to get an idea of, like, get in the mind of Vitalik, right? So rollups. So if you just search, this is a really good guide. It just goes over a background of scaling solutions and the difference between plasma, rollups, ZK, snarks, and basically every variant of a layer 2 scaling solution Ethereum could implement. So the idea is they don't have sharding yet, but Near does. So it's, for me, Near is already leapfrogged over Ethereum, which is why once their ecosystem grows, I feel like they have more upside than Ethereum will have. And again, a quick overview. It's a multi-chain layer 1 protocol. It's connecting with Polkadot, Ethereum, Cosmos, Aurora, Solana, Celo or Cello, Polygon, and Binance Smart Chain, even Avalanche. They're using, protocols like this one right here. Allbridge. So it's a cross-chain bridge. This is how much has been used already. So you could basically transfer between all these chains using Near. So that's what Near is using. And I think interoperability is going to be a big deal. And I think Near is positioned well for that. Again, they've already implemented sharding. And what they're doing right now is dynamic resharding, where they're optimizing their chain by giving the ability of each shard to either multiply or divide based on the scaling requirements of the chain. So assuming they have an extra large shard and they don't need it, or let's say they need more shards or side chains, then it allows them to break that larger block down into separate parallel side chains, and then using sharding they can improve the output or throughput of their blockchain without changing any of the fundamentals or the mechanics of the chain. Like that layer 2 scaling solution allows them to settle a lot of the transactions off chain or on the side chain and then bring it on chain for the main one. So that's like another. And by the way, when it maxes out and they've fully rolled out the dynamic sharding, it's going to have the capacity to do 100,000 TPS. So it'll be on par with Solana and any other major like fast chain. So I think Near and Solana are direct competition. And for me, just based on sentiment, based on the funding Near has, the war chest, I know they're behind with NFTs, but I feel like the tech and the dev team behind Near will get this one right in the next market, and there'll be more upside. Plus Solana's already at a premium right now. For me, I'd rather catch the one that hasn't run up as much yet, but is doing cutting edge development right now during the bear market. And I think there'll be more upside when you invest using that thesis, right? So dynamic resharding is going to be a big deal. They also have their own native virtual machine, and that's going to basically allow them to provide smart contracts using implementation of EVM, so Ethereum Virtual Machine, on Aurora, which I think Aurora is the protocol that they're using for scaling that has the most total value locked. So if you look at the TVL of Near on DeFi Llama, they don't have much on their TVL, but they're using Aurora on the side, and that's where most of the DeFi total value locked is ending up on. So it'll be interesting to watch how Aurora scales and like its path in the next year or two, because I think the combination of Near and Aurora are going to do really well. They also have an 800 million ecosystem grant. So for me, that's a big deal. Like I can't remember one other protocol that had this large an ecosystem fund. AVAX came up with something like 250 or 400, and everyone was blown away. But then I heard this one, the 800. I mean, these guys are mega funding them. Andreessen and all the other big VCs behind them, really funding them. They also did a hackathon for NFT called MetaBuild. So there's going to be a component to what they're doing. They really want to scale, I guess, on the NFT side as well. And if all the big chains are betting on NFT and metaverse, you got to imagine that at some point there will be adoption, and there will be this parabolic curve for them. But yeah, that's the other reason why I think they'll do really well. They have a lot of funding behind them. Here's the token unlocks. Again, they have a pretty good float already. So they're going to have additional supply of 3.6% coming in the market within the next 2 more months, let's say. It says 3 here, but this is from May. And then over 6 months, they're going to have 7.1% increase. So keep in mind, you're going to have compromised funds like 3AC that are going to be dumping their supply when they're unlocked into the marketplace. And then you're going to have the regular unlock schedule on top of that. So there's going to be some sell pressure along the way, which is why don't rush in to anything you're buying, but rather, look for an accumulation structure before you go in with like the giga entry, So last details, look into their LinkedIn profiles for the team. They have a really stacked development team. And they're creating a token factory where basically allowing any layman to mint tokens without knowing code. So I think they're making it in a way that's very accessible, which is going to inspire blockchain adoption. Like the easier you make the on-ramp for people to mint their own token, develop their own protocol, create real utility and use case, the more adoption, then the total crypto market cap is going to keep going up. So that's something I'm watching. Shit, man, BTC is just like trapped at 20 grand, 300. Brutal. So weak. And the last thing with Near, they have major investors. I always look at that, like there's a lot of signal to noise with these protocols. Most of them are vaporware, but with Near they have Andreessen Horowitz, Naval Ravikant. He's like a major angel investor out of Silicon Valley. Multicoin Capital, Pantera. The ones I just named, they came in on a round that was $150 million, and they did it like overnight without anyone knowing about it. It just happened. So it tells me that the big money believes in this chain, and if that's where they're allocating to, there's no reason why we shouldn't be at least considering it when we're going to enter or re-enter the market. Next one is Meter. You see this one showed a lot on Twitter. It has a very low total supply. It's only 40 million, which I like. What I don't like, it's low flow. It only has 31% circulating. You want to see, for me, I only want to enter projects that have like very clear sell pressure. Like if it's suddenly you get unlocks and there's a massive amount of sell pressure, I don't want to be a part of it. The one good thing is it's a low market cap. So if you're gonna roll the dice on an L2 or L1 scaling solution or a hybrid, when you have one that's this low, 26 million, all it takes is like a few whales that can move it in either direction. So if you want to gamble with something like this and you're playing with small money, and you think we caught the bottom, I think the run up on this will be faster than other coins. And you've noticed it recently. Like anytime we've had any rally, Meter has been the first mover. Like it's been more immune to the drops. Like it gives you time to get out of position when the market comes down. And when it goes up, it tends to be sticky. Like it goes up a little bit longer than the rest of the market. So I feel like its correlation or the way it moves is at a slower delta than other coins that are like directly correlated, like Thorchain. Thorchain, it's part of the mechanics of their token, where they're like super highly correlated with BTC and even ETH. Whereas Meter governance gives you a bit of time to get in and out of positions. So that's one I would roll the dice on. Where is it? Here we go. So my entries are going to be 115 to $1. Again, look how beautifully it bounced off that zone right here. So I've been tracking it. You could even add this over here. So on this down thrust, this final down thrust, it found support on the upper bound. It tested the middle region, then it peppered the bottom. So it's like a full test. Like harmonic traders love this, right? It's basically testing the whole area, especially if you get into like bull div. Like it had 3 drives of bullish divergence, and then it launched it into a perfect textbook shark. And then 1, 2, type 2 return, broke out again. So you now have 1, 2, 3, not really 4. This is a very preemptive run up. 4. So basically 4 major inflections coming off there. So for me, 115 to $1 is going to be a nice entry. $1 just because it's psychological, and it's the lower bound of this zone right here, where it seems like everyone just enters. So if you wanted to roll the dice, that would be a reasonable area to do it in. And then my second entry, I would have a stop below, and then I would re-enter again anywhere between 25 and 50, just because that's where the ICO number was. So when you see the price come down into an area or a zone close to the initial coin offering price, where people, you know, got a discount, they're less inclined to sell at 50 cents, because then they're just at break even from what they paid on the ICO. So they have zero incentive to dump over here at 50. Like, I'll just add that in. Usually I use that on my regular charts, but so now I have this, and then I'll set an alert here on the actual horizontal line. So once the price descends and cuts into that 50, I'll get triggered an alert on my mobile, and that'll tell me, okay, we're at a level where the ICO happened, so there shouldn't be that much more. Like, anyone selling below this is selling at a loss, because we haven't been to that level before, right? So that would suggest that everyone who is in profit were selling on the way down to 50, not under 50. It wouldn't, like, the incentive is not there anymore. So that's why this level would be an area I would ape in if it got anywhere between 25 and 50. The upside is immense on this one, right? So you have pretty good upside. There's your all-time high, 54x. And that's what we're looking to do. Like, the whole point of this exercise is to snipe an ultimate bottom or very close to it, and then get the highest X's on the next run. And the idea is you got to just desensitize. I mean, we're so desensitized right now. We want, oh, when Lambo, like, we just invested today, by the end of the week we want a Lambo. Get the fuck out of here, man. You got to sit on positions sometimes to get that 54x, right? So the idea is just enter at a good spot where you have limited downside and you have an asymmetric upside. And for me, that 54x looks good. Again, this is just a benchmark for value, the 886, the cycle 886. And the way I'm doing that, real quick to show you guys. I mean, this is probably not a good example because it had a very scammy wick here. But if we took only, I have a different fib queued up. One moment here. So if we just measure the bottom over here, this pin bar wick here, to forget the scam wicks over here, but you know, after we retrace, this was our top right here. So I'm using that as my origin point, 0%. And then your 886 for the cycle is over here, like 288. So hold on, maybe this is wrong. No, I think I marked this in on the chart wrong. One moment. So I'm a bit distracted. There's people yelling at my work. Yeah, this is a bad example. My bad. I'll show you another one later, but because this one had all these wicks. Yeah, forget this one. I'll show you another one later. This is low, Here's a link to their tokenomics, so if you guys want to go through it, it'll be in the slide deck. We're not going to go through it now. I'm going to try to rush through all the other picks and entries. Thorchain is going to be another one you might want to have exposure to, just because, you know, they're moving toward a DAO decentralized exchange. And here's the key levels. Entry 1, 38 to 32 cents. Where is it? Man, this shit's down. So that's going to be this level right here, which we double bottomed on the launch over here. So 1, 2, and then it ran after confirmation. So that's going to be my first buy level for Rune. And then my next one is going to be 5 to 10 cents, only because the private sale was, you know, 2.5 cents. So I think once you get in that range, 5 to 10 cents, sell pressure will diminish. You could even hold off and not go in, you know, until you have confirmation at least, but hold off and see how the action is between 3 and 5 cents. That might be another area too. So you could DCA in, just basically ladder in here, one part of your position, like 30-40%, and then the rest over here on whatever your allocation will be. Again, we're below the cycle 886. This is something I love to see, 100% of total supply in circulation. This is like the gold standard for an investable project, assuming there's no other weird emission mechanic within the protocol, but I don't see how there could be. But 100% circulating supply, this is always a good thing. Here's a reason I think it's down lately. So there's a blog post, where is it? Right here. So there's a blog post, yeah, I don't have it in front of me, but you could look it up. Basically the head dev, the one that's doxed, he suggested that any of the major vesting unlocks would be moved forward to the mainnet launch, which just happened on June 23rd. And they're basically awarding from their foundation fund or whatever, like basically their ecosystem or foundation fund, they are awarding $1 million worth of Rune to celebrate mainnet launch to Binance users. So anyone on Binance. So that's what I think has caused the sell pressure recently. Basically they waited, and when they got their token, just started dumping them on the market. Anytime you do something like this, you're incentivizing bad behavior, meaning like token dumps, right? So always suggest read blogs of these projects. Some of them that are forthright, they'll actually put modifications to the tokenomics in the blog or the medium. I'm shocked they actually did this. It's kind of a stupid idea, but I'm sure there's a reason for it. Who knows? Anyway, that's another project I'm looking at. Kadena is going to be another one. Kadena, the main reason I want exposure to it, just the idea, it's like an optimized proof of work compared to, like, it's made in the same vein like Bitcoin, except it's optimized, right? It's more efficient, and it's an L1, extremely fast, 99% lower gas fee than Ethereum, and it's got some major investors like Multicoin behind it. Also, it has a lot of exposure to like deep ties with TradeFi, in the sense that the two main founders, they're both from JP Morgan. So they were, you know, they're employed at the top levels of JP Morgan. And I think they initiated a coin, I forget, it's called like JP coin or something like that, where they were going to start experimenting with blockchain technologies and how they relate to DeFi and moving from TradeFi into you know, decentralized finance. So I think based on their ties with TradeFi, there's a really high probability that if Kadena does well and they prove the concept and the adoption curve starts moving up like a hockey stick, that they'll probably have a lot of connections in TradeFi to convince them to start using the blockchain or moving into whatever DeFi apps are built on Kadena. So I think one of the bets I'm hedging on or waiting to see how this works out is how institutional adoption will work and how the transition from TradeFi to decentralized finance is going to happen. I want exposure to that. So the other items on Kadena, I could bet you anything it's going to my levels. Like these are, you guys follow me on Twitter, you already know I've created levels months ago, and it's going there. Like we're so close now to my target here at 71 cents. And then my final level is going to be here at 36 to 31, which is, I mean, this is the Chad entry, right? You get 36 to 21, you basically got this area of deceleration on the first parabolic run where it tested the whole zone 3 times and then ran. So I think there, and you could check the volume profile, there was a lot of interest at that level, and I think people that made money on the run up, say from here to here, they made insane amount of money, like 50,000% gains from here 32 all the way up to 32 cents to 27.88 or whatever. Those same people sold the top into strength. They're going to see if price comes down to here and BTC starts accumulating and they get a signal, they're going to start re-entering because they associate a good feeling with trading this coin. So I think there's going to be some big money wallets to jump in this range here, 36 to 31. And again, you have a max upside. If you got that Chad entry at 31 cents, you got 91x. Private sale was 50, so the other thing you're assured when it breaks this level here at 76 to 71, you're between zones, right? So you're between reactive zones about 50%. So there's no reason, no logical reason anyone's going to enter in this gray area, this gray space over here. They're basically, logical people are going to stop out over here and then just re-enter at the next key level or reactive level. So again, don't fight trend. Don't try to be a contrarian. That's how you get wrecked when you're creating entries or trading. And just go with the masses down here. Why not? Especially if you see some kind of like basing going on over there. I don't like this. Circulating supply is really low flow to 18%. They're going to have a linear unlock every month, about 6.5 million tokens, which, again, considering the overall supply, it's not horrific, but the fact that they have a low circulating supply is bad, right? So again, this is very low float for an L1 compared to Near, or basically all of them. You can go to Avalanche, Polkadot, all of them. This is the least attractive ratio that you'll find. So I don't like that, which is why, even though I believe Kadena has strong ties to TradeFi and it's like a good one to roll the dice on for institutional adoption, the mechanics of the tokenomics are bad. So that's why I wouldn't risk too much on this one. It's like, it'll make a very low percentage of my entries when I decide. And then here's a link to tokenomics. I mentioned Aurora earlier. Again, this is a scaling solution on Near. So it's a very interesting protocol. I like it a lot, actually. Let me pull up the chart here, just so I could show you what a rect chart looks like, which kind of excites me. So if we zoom out, most people would look at this and just get turned off, right? They would go, what the hell, man? $35 and now we're down at like $1.37. Yeah, that's what it is, right? But why would you get excited about buying here at 27? You should be getting excited here, where we are now. So anyway, all that does, it just shows there's pretty good upside from where we are now. Also, the private was at $1. So we're around that right now. And you'll see people started entering. So demand and demand increased right as we approached that dollar mark. here at the lower bound, 112. So people were front running an area where they knew the IDO price was, and where, you know, basically there would be an equilibrium between demand and supply. So I like to think of this as a very logical binary entry around $1 if it ever goes down there, which it will. This will get wrecked. If Bitcoin goes to 10 grand, this thing's going to like 10 to 20 cents, right? I think people that entered on the IDO or the private, they'll just get rid of their tokens. And then again, if they do, meaning all the VC unlocks are happening, and you know, people that bought the private sale at $1, assuming they can liquidate their funds or investment in here, if they get rid of it, then these guys have no money to support future ecosystem development, right? Unless they've already got that in the background, like, meaning the investors could still sell their tokens, but they already have like ecosystem funding secured. So anyway, $1 is like an area where either people step in or they just let it die. And if they do, I want to buy this on pennies on the dollar, you know? And then read up on Aurora. It's a very interesting protocol. The thing I don't like is circulating supply is very low, and they have a massive total supply. It's actually horrific. But again, they have the major unlocks are going to have an acceleration on the 12-month mark. So you effectively have a window between when it was launched. Let me just pull it up on here. Yeah, so that was last November. Basically, they launched at the top of the market. Holy shit. Trash. Anyway, they launched at the top of the market, so you have a window between now and November where there's very limited unlocks, right? The real sell pressure comes in this November. So you have a moment in time where, you know, if there's going to be a major bear market rally, and we do get, you know, an opportunity to get a quick run in before the full collapse, or maybe the market just bottoms completely and revert, not likely, but if it does, you have until November to make a move with this one. So it's just an interesting, like, read up on Aurora and how they're involved with Near. It just seems like there's going to be a lot of projects and DeFi apps or decentralized apps being built on it. Here's another one. Again, I want exposure to all major chains. So the idea is to have a little of this, little of that. Don't put everything in Polkadot ecosystem, because if Polkadot goes to zero and it becomes vaporware overall, then you have 100% of your net worth in one project. You know, that's like a surefire way of going to McDonald's, working at McDonald's, man. So the idea is I'll put a little bit in Rose, I'll put a little bit in the Near ecosystem, a little bit in Avalanche, a little bit in Polkadot. This is my pick for Polkadot, and I actually did a post a while ago. Show you guys real quick. Yeah, so this just shows the mechanic of how the tokenomics works, and this is one of the chains in the parachain crowd loan. So when Polkadot launched their parachain crowd loan, it was between the front runners were Akala, Seer, Moonbeam, and A-Star. What I did was basically a snippet showing where the sell pressure could come from. So here's investors. So this is the investor allocation for each parachain. This is the advisors and team. So you'll note that A-Star has a substantially less allocation, substantially lower allocation to the investors, 10% relative. Look at Akala. This is going to be a dump fest, right? 30%, they have 1/3. So then you have team and advisors, 5%. Again, it's 1/4, a quarter of what they have. Akala has 50% of their total token distribution going to investors, team, and advisors. This is exactly the VC predatory VC model that has crippled crypto in the last year. They're just taking advantage of retail. When you see, this is why you have to compare each protocol and understand where the real value is. So this right here, knowing that they're one of the parachains that got their parachain spot and they have way less potential sell pressure, that alone is like making this very investable to me. And the fact that they're attributing a higher percentage of their token allocation to ecosystem, this means that they're going to be spending more on their ecosystem than these assholes over here. These guys are just trying to get rich for the team and the VCs, versus these guys are trying to develop a product. And then here's your crowd loan, total percentage. So for me, the tokenomics look good. And then when you go through the data, again, they're going to be the multi-chain decentralized app hub on Polkadot. So it gives you exposure to Polkadot, which is the other comparable chain to Oasis, which is going to offer interoperability between all the other blockchains, which is what you want. I think the next cycle is going to be defined by interoperability and privacy. So that's something I'm looking for. And even if you don't have very specific coding language, they do WebAssembly too, which is way more familiar and easy for developers from what I understand. So the other thing is they've secured a lot of Web3 grants for all this, including what I think will be another major narrative on the next cycle, ZK rollups. So I think these zero knowledge proofs and rollups are going to be a big deal. They're going to allow blockchains to be optimized, and I think any protocol that has major exposure to them are going to do really well. So that's why I even have like a bookmark for this one right here, ZK Sync, because I think this is going to be another like really solid project. So this is again an Ethereum initiative, but read up on ZK Sync. And yeah, also they have a really cool structure for incentivizing stakers, so stakers in the network, and decentralized app developers, just because their ecosystem fund has a lot more money attributed to the ecosystem and to pay developers, as opposed to these leeches, these VCs. Trash. So key investors, this is another important detail. They have Binance Labs. Hashkey's all right, whatever. But Binance Labs is the big one. These guys, not so good anymore. Eddie would know better. I see him on the call. But yeah, Al21 is another one, and these are other protocols they've helped launch. I showed the tokenomics. Yeah, just look into this one. I think A-Star is going to give good exposure on the bull run to Polkadot, and it should do really well. In terms of price, where to buy, I mean, we're already below, the initial coin offering. That was at 25 cents, right? So we're in price exploration, price discovery, right? So I think for me, I got to buy this up for pennies on the dollar. Like, that's the only thing that makes sense. I want to be really greedy when this thing bottoms. For me, it's going to be 1 cent to 3. And then, there's some reasonable targets, not a crazy upside, but like, dude, try to get 33x on equity trade. Come on, we're spoiled. So here's the chart for A-Star. Yeah, we're like flirting with that final low here. So that wick, we haven't tested the wick low, but I think when it breaks that wick low, there's going to be just a precipitous move down. It'll be very quick, because this will all be inverse price discovery at that point. So A-Star, again, it has to make sense financially for me to enter a position. This is the only one that makes sense to me. These are the clear defined exits based on reactive zones on the chart. Your all-time high, 33 cents, so 33x, not bad. Again, you're below the coin offering. So although in theory sell pressure should have subsided, if we're going full bear, no one wants to hold this. You know what I mean? People are more likely to hold the main chain, like Polkadot. They'll hold dot tokens, and they're likely going to liquidate their A-star positions. So let them, and then snipe here. Forget the cycle 886. That's done. Again, if you want the tokenomics, you could just go on to the thread I made here. Just type in my name and then $ASTR, and you'll find it on there. So next, Metis. Again, this is going to be competitive with Arbitrum and some of the other solutions on the market right now. Very easy entries here: $7.93, $7.20, $4 to $3.25. It did well lately because I think it got listed on Coinbase, but let's see, where is it? There we go. So Metis has a very clear area. This is their point of inflection right over here, 64 to 61. I mean, you can't get a clearer back test SR flip than that, 1, 2, 3, broke down, retested. Look at the 2 wicks. You get the tweezer top, and then it just died after that. But it found support right on that line, which was the previous pin bar high. The problem is we haven't had an unruly sell-off yet, and I think that's coming. So when we do end up, everyone just starts panicking and selling off. I think this one, because of the low market cap, it's going to get decimated. So this one's 89 million. So I'd imagine, if we approach 18 to 15, we're going to be down to like 60 million or something like that. Then I think that drawdown is just going to be amplified by the low market cap. So you get 1 or 2 big whales in Metis that sell off. Then this thing is going to flirt with the first reactive zone here, and then it's going to be $4 to $3.25. That's what I'm looking for, which is the double bottom here. I mean, you can't get a clearer double bottom than this. 1, 2, run. Look how parabolic it went right after that. That was a 38% candle. The next one followed by a 44% candle. Just ridiculous. So those are my levels for Metis. You can research it more, but I think this is the level I'm comfortable at. $4 to $3.25. I'll roll the dice just because there's pretty good adoption. When you compare it with, the other thing is they've been swallowing market share in this segment. What the hell's going on? So this is what the rankings were late last year, and you'll see where was Metis? Metis was ranked number 10 with a TVL of 61 million. This is recently, the other day actually. I don't know why I can't open it, but you'll see it ranks now here like 5th, and it's at 104 million. So it's absorbed a lot of the market share, where the TVL has increased, although the overall market share has dropped. So for me, that's another sign I look for. And I think that's why, Metis, when you buy Metis at like 40 million market cap with the crazy upside that it had, it went to like 350. Yeah, like 322. That was a 63x. So if you could buy in that range, I think you're solid. You have a lot of upside. The max, if you buy here at 325, is going to be 99x, so like 100x. This could be 100x. I'm not trying to give hopium, but it's one to look into. I'm looking for projects that are swallowing market share in their respective space. That are taking most of the TVL from the other weaker players. Matic would be another one. I have a buddy who bought this at 2 cents last cycle and ran it to like 260 something. So there's your all-time high, 292. My areas of value are going to be here at 13 to 8 cents. and then 4 to 4.5. And if you look at the chart, there's a lot of participation in that 4 to 4.5 cent range. And then the idea is you have very clear areas you can just put a stop. So if you don't catch a bounce there, you go down 30%, buy it in this range, 2.7 to 2.18. And then again, you could cut your loss if it keeps falling, rebuy here. I don't see how it could ever get to 2 cent, but if it does, there's a level there. So I'll have the charts in the final, I guess, spreadsheet, but Matic is one, this crazy, like the envelope behind their ecosystem is wild. Like they've got tentacles in everything. And it's because they're one of the first L2 scaling solutions en masse that have proven themselves. So they're battle tested with Ethereum now. They're actually responsible for ETH scaling and being able to do such output even though they had so much congestion. So I think Matic is positioned well now, and they've actually got tentacles in NFTs, metaverse, they're all over now. So I think they're also building their own chain, right? So I think Matic is going to be one of those L2 solutions that can really explode in this cycle. Max upside if you buy here at 4 cents, 73x. Private IDO, look how low these guys, these leeches bought it for like a fraction of a penny. Insane. We're already, I believe, right at the cycle 886, caught support there too. Yeah, this thing got down to 31 cents and then it pumped hard, man. I remember this last week. 100% it pumped off this reactive. Like they front ran this zone, but like right here at 30 cents. So Matic is another one. 10 billion supply, which is a lot, but they have like their ecosystem is massive, right? So they need more tokens just for, I guess, what's the word? Adoption? No, there's another word I'm looking for. Value extraction. And again, they have 80% floating in the market, so that's good. Like you're pretty immune to major dumps at this point just because it's been around. And then here's a link to their tokenomics. Loopring's another one that I'm looking at very carefully for an L2 solution. I brought this up many times on in our Discord. They have a partnership with GameStop, where GameStop is just launched their NFT protocol on Loopring, so that's good. Like it's a pretty strong use case there. I just think Loopring is another one of those protocols in the L2 layer 2 section that is going to do really well. Sorry, I'm not going to open that right now. These are the areas of value. 13 to, sorry, one second, I gotta shut my phone off. Super distracted. One sec. All right. Yeah, so entry 1 around 13 to 11 cents. Entry 2 9 cents to 7.2. Where's Loopring? LRC. So here's your double bottom here, confirmation before it went parabolic. And then here's your Chad entry at 9 to 7.2 cents. So that's actually, this is the number I'm looking for Loopring. I think that's going to do really well. And if you buy at that level, 7.2, you have a 53x to the max upside. So I think at this point they're battle tested, and now they have a big name behind their NFT market. I just think it's going to start scaling on this next cycle, and there's a lot of use case behind it. So you could read up on the NFT article here, also their tokenomics. They have a really high total supply, but the beauty is it has everything, almost everything floating now, 91%. So you're not at risk of being dumped on like some of the other low floats. Again, we're below the cycle 886. Loop ring, it's going to be another one I'm looking at. So gaming, all right, so the gaming section, I'm going to make this clear. The biggest bet right now Andreessen Horowitz is doing is on gaming. They just launched their Fund 4, and it was focused on gaming. 4.5 billion, it was basically 2x any previous fund they've done to support developers and gaming studios that are focused on crypto gaming studios and crypto gaming. So here's a link to it here. We can quickly open it right now. So read up on this. What I've done actually in the slide deck, I've been tracking the gaming studios that they've invested in. These are the ones. This is the one that's going to be big. Forte, it's infrastructure rather than gaming. But these are the gaming studios that they're going to be investing in. So here's your Fund 4. And again, he's a really good follow, Chris Dixon. He, on Twitter, he typically foreshadows a lot of the stuff they're doing months in advance. So if you want to always be abreast to what the big fund, like this is the 800-pound gorilla in the VC room, you want to be abreast to what they're investing in. Follow this guy, Chris Dixon. He's really, really good. Good interviews too. So, yeah, brother. Oh shit, man. This Polygon's going big this time, eh?
Yeah, they spent a lot of money acquiring a bunch of other smaller blockchain companies, specifically for scaling and for security. Definitely really big.
Nice, dude.
They're not going anywhere.
Yeah, man. Polygon's gonna be, well, I noticed that they're like more focused on gaming now, eh?
Yeah, when you're done, I got some more cash.
That's sick, bro. Yeah, for sure, man. Let's do that. And by the way, guys, Eddie, for anyone new on the Discord today, Eddie, this is his focus. That's why he's talking right now. Like, dude, he should have just bullied me right off my own space right now. He knows gaming. He actually, I'm not gonna disclose it, or could I? Yeah, yeah. He got a job at a major crypto gaming company. So he's going to New York, baby.
Yeah, and we're in the beginning stages of finding funding. And yeah, man, it's interesting to say the least.
It's wild, man.
That space right now.
Yeah, Eddie's doing big things, guys. He's made a game, dude. A blockchain game. He's actually developed a blockchain game.
Yeah. Well, it's not quite there yet. It will be someday.
Oh, it's coming, bro. Keep going, man. Yeah, Eddie's putting his money where his mouth is, man. He's putting his time and effort into it, right? A lot of people just we're using this for like creating adding to our net worth, you know, and like building our bags, but Eddie's actually in there doing it now. You know what I mean? He's in gaming. So it's very cool that we got him on the server, man. Yeah, interoperability? Yeah, bro. There's a couple protocols I'm going to share in a bit for interoperability. But yeah, that's going to be a big narrative on the next cycle. If you're not interoperable, like the idea, it's like water, right? It takes the path of least resistance. So if you're not interoperable, you're just going to be vaporware on the next cycle. It's got to be easy for people to transact and, you know, do things on chain. If it's not, then why are you here, you know? So I think interoperability is going to be a big deal. But yeah, look up, if you guys want another good blog to follow, it's going to be the A16Z crypto blog. They do a lot of, it's like eerie how they foreshadow a lot of the stuff they're going to do months in advance. So it's like a really good blog to stay attuned to what the big money guys are going to be investing in. But check that out. And then these are the games that they've invested in, or the gaming studios. Yeah, I'll be honest. Chad and I haven't looked enough into quant recently. Like I did briefly when it was like months back, but I I don't know enough about it to be honest with you, man.
Forte is a really big deal because they have a huge studio basically everything in right now as far as how it goes.
It's a challenge, bro. Like traditional studios, it's hard to get them on board, man.
Well, and the big thing for developing right now is a lot of the guys that were badass rockstar developers, they made their huge bags and they exited the space. Like they retired a lot of them.
That's hilarious, man. They're just like, fuck it, give me the money, I'm out.
Pretty much, they're like, why would I be working 60 hours to build a chain to a billionaire who could easily do that?
Why not, man? It's they took the risk, right? So
Yeah.
the thing is with gaming, like there's not enough games right now that have mass appeal. You know what I mean?
So
Like
yeah,
AAA studios.
the biggest issue is most of them were games created by blockchain developers, and they're just not fun. And most of them, like 99% of them, are Ponzi schemes and tokenized
Hmm.
chains that built pretty much out of the air.
Yeah, man. You're right, dude. It's just they're just trying to exploit. They're trying to extract money from retail for the most part.
Right.
I think the move happens when you get the AAA studios jumping on board. Like it wasn't a Ubisoft that was like fighting it. We're never going on chain, and then they started to crack a bit.
Yeah, dude, they've actually published a lot of really cool games.
See, it's starting, bro.
And Epic Games made crazy stuff, dude. They got a $2 billion funding from it was like Lego and I can't remember the other one off the top of my head, but $2 billion in funding.
Dude, that's nuts, man. That's crazy how much. Like, look at this. Their fund four for a whole, like the number one venture company, their fund four was 4.5 billion. These guys got like half.
Mm-hmm.
That's like half of their whole fund. Remember, this fund is distributed over all these games, plus another 10. These are just the ones I'm following, or the studios I'm following. That was one company that got 2 billion. Holy shit. It's a lot, man. It's happening. Like you can't fight it. They're doing these traditional game AAA gaming studios. They're apprehensive to join in the beginning because they secretly know they're going to be doing it, and they just want to get in at the right time. They're gonna
No,
they're gonna be in, man.
the biggest problem is most of the traditional gaming studios. So the one that I got onto, they're a traditional gaming studio, but it's just starting to do most of the real developing on the blockchain. Is most of them don't understand the blockchain at all, and so they're in the cycles of oh everything's commodity, everything's scale, and so they have kids who join it, but then once they finally get the idea of oh wow like this is kind of the future because the needing of cryptocurrency NFTs just makes too much money in gaming.
Yeah, dude, it's the catalyst for growth. It's the one real use case that crypto has, man. NFT assets for gaming. Come on, man. There's nothing better, right? Like other than maybe supply chain management on chain. Like that would be another one right now, just because the climate we're in with the supply chain being destroyed. So that would be like the major one. But the second one would be gaming. Like there's no other part of the economy that lends itself better to blockchain. So I think that'll be the big adoption curve. Wow, this actually bounced right on. This is on a lower time frame. I think on the 4 hour it caught a nice bounce. Shit.
I'm gonna mute myself and let you finish up here.
Yeah, dude, I'll rip through this. We have a question here. So I don't know if he's here. Occult. Hey, brother. Occult. I got your request, man. You're on. You gotta unmute your mic, or you gotta give access to your mic on Twitter. If you're still there, man. Okay, maybe it's gone right now. All right, let me know if you want to ask a question in a bit. Yeah. So the other. Oh shit! There you are, man. How's it going, dude? Good, good. Yeah, man, I got your request, so I wasn't paying attention.
Giga nuking the market.
Yeah, man, send it to zero, bro. It's too high, man. We need zero tonight.
Indeed, indeed. It's a full-blown scam
Yeah,
as of
man.
now.
Well, look at this. Hold on, I'm gonna show you where BTC is now. This is full, like full on scammery going on right now. Watch this. This meme neckline. This meme neckline that everyone drew for the Head and Shoulders. Watch this.
Yeah,
It's happening right now, man. Dirty.
yeah. Hey, listen, Giga. I was the same guy asking you on the Discord about quant.
Okay, yeah, yeah. So
Yeah. So basically, are you open for the thought process about CBDCs and uh, they are getting interoperable with the blockchain for I mean the R3 Corda and all those legacy TradFi systems who are used by big banks. Are they probably going to follow blockchain for processing the transactions and transfer of assets?
it's gonna happen. It's gonna happen, but like for instance, Algorand. I just pulled it up on the screen. So they were selected to power the central CBDC of Marshall Island. So what this is, it's like a proof of concept, right? So if you get one of these island states, or like their sovereign is running off blockchain technology, you get a few of these smaller islands, and they're all like, they're showing the proof of concept that we can run our economies on chain. Then that's going to start building momentum, right? So then you get a major funded blockchain like Algorand that has maybe 3 or 4 proofs of concept where they have countries running on chain on the CBDC. Then yeah, man, that's probably going to start happening. You can't fight it. Then I think, from what I understand, there's 2 versions of CBDCs, right? There's one more geared toward commerce and the economy, and then there's one for the individual. I don't want the one for the individual, man. That's going to be a problem. Because then they're monitoring your buying habits. They're like, oh, you buy too much junk food, we're cutting off your credit card. Or, you go out too much on the weekends. There's always going to be something they're monitoring. It's not good, man. You lose that autonomy that you have with crypto. Like, this is all done in the vein of self-autonomy, creating your own financial freedom, not being dependent on the government or anyone else. Like, that's the vein that crypto was created in, and they're trying to take it away, man. Like, I'm not letting that shit happen. If that happens in the West, I'm out, man. If they start forcing people to use CBDC, I'm gone, man. There's no. I'm already gone. I'm just waiting for the right time. But yeah, man, this like monitoring. I think there's gonna be a move toward privacy. Like, some of the coins I have on this list, they're well, the first one was the privacy chain, right? With Rose, and then you're gonna have some coins that privatize the metadata. So they tokenize your metadata, and it's like decentralized. Nobody has access to it. There's no like centralized platform that knows who you are. That's the future, man. Not this CBDC bullshit, dude. They gotta nuke that, man. Fuck Bitcoin. They gotta nuke CBDCs, man.
Right. So the programmable money is something like a two-edged sword, and you can have benefit of it, but you can be used as a political tool in that.
Yeah. It's not good, man. Like, people looking over your shoulder at what your habits are and all that. It's none of their business, dude. If you want to go to the gun range and shoot guns, that's your business. That's not the government. I don't know. It's not healthy. It's not part of a healthy economy. But like, there's applications where it could be good, but not to the private citizen of the state, dude. We should never be monitored on the blockchain. That's not good. But yeah, this is like the first real proper use case of like a version of a CBDC with Algorand. So we'll see how that one goes. And either way,
So does it have the privacy factor that you mentioned? Does it encapsulates the transactions, or are they still available on the block?
sorry, man, I'm not following the question, bro.
So does the Algorand has the privacy factor built into it? I mean, for example, if I have the programmable wallet, let's say Algorand driven US dollar, and I probably go out and spend on McDonald's, then is my transaction still available over the block? I mean, if anybody knows my wallet, he can track me down on that, right?
Yeah, I'd imagine. I'd imagine that's what it would be. I don't know, man. Like, I have a general distrust for government and CBDC. I don't support any of that shit. It's none of their business, man. Like, I'm supporting Monero, privacy coins and privacy chain because that's not. They should never know who you are. We should all be living anonymous or pseudonymous relative to our government. They should have no access to our finances or habits or anything like that. It's very dystopian, man. Like, have you read George Orwell, 1984? That's like,
Yeah.
that's what it is. Like, the whole concept is Big Brother is watching, right? So I don't want to be a conspiracy theorist, but if, like, it's all being implemented, the CBDC is being implemented in under the guise that it's helping you or benefiting you, when in fact it's a monitoring tool. That's all it is, man. It's nothing else. It's being disguised as something. I think the Chinese gave their citizens, when they introduced digital yuan, they gave like an airdrop of $10,000 equivalent or something like that. I can't remember the exact number, but they airdropped them a certain amount of money and they got to use it. So everyone's distracted by like the free, but now they're being monitored. You couldn't pay me for my privacy, dude. Like, there's no number you can give me. I want privacy, you know?
Indeed.
So I don't know. It's like very dystopian. The whole idea behind CBDC, nuke the government, fuck them. We should never give in to that. There should be. I don't want to start like riots, but like, you should never give in. Always fight. Don't ever give it to them, because they. The problem is, when you give a bit of your freedom away, they want more. Like, when they did this in the States, they did this. What was it called? Homeland Security Act, where basically after 9/11, they allowed the NSA to start spying on phones and watching your habits online, and basically cooperating with like Facebook and all the other big tech companies to intercept data on you. Did they ever give it back? Like, it was an emergency decision, but they never took it away. Like, it still exists today. So like, that Homeland Security bullshit, they never gave it back. So they took our rights, and this is how it happens. They take little at a time, and then you get desensitized to losing your freedom, and then before you know it, you're living under a rock doing nothing, man, just like a slave, you know? Now, I don't believe in it, and we should revolt if it ever got there. You know, we should. I'll be wearing the Viking helmet, face paint, a fucking giant chinchilla vest, coat. I'm ready, man. It's not happening on my watch, bro. It is what it is. Anyway,
So
man.
which other interoperable coins are you looking up for?
Yeah, I'll get to that shortly, bro. I'm gonna get back to the quick presentation here. I gotta speed it up, man. I don't want this to go too long, but
Sure.
yeah, dude, I appreciate it, man. I'll get to the interoperability shortly, man. Cheers, bro. All right, so the other gaming company or protocol I like is Gala. I think they're gonna do big things. Eddie knows more about them than anyone. He's like big into Gala. him and Tyler. These guys both know the project inside and out. Here's the chart. So we had a nice pump, like a reflexive pump over here with that giant wick. And now we've come back down to fill the wick right here. Basically, I think we're going to fill the wick and then fall in the next zone right here. But the numbers I'm looking at are 2.1 cent and 2 cent, and then half a penny to a penny for Gala. So I think with half a penny, your upside is 84x, which is really good. And they have so many projects already that exist that I don't see them becoming vaporware. I mean, they're not vaporware. They have functioning, working projects. So I don't see them vanishing during the bear market. If anything, I think they're going to scale up, and they're going to use the bear market to start building more. They did a fair release, from what I remember Eddie saying before. Lots of upside. Tokenomics is not the greatest in this. Like, I'm not saying it's not the greatest, but there's only 20% in the circulating supply. Again, they're rewarding validator nodes, and like there's a whole bunch. It's more nuanced than just looking at the 20% circulating supply, you know. But I'd want to see more float for it to be, you know, more attractive to me. And then here's their tokenomics with the
circulating supply. There's kind of two trains of thought when it comes to gaming. One is that you want to see the circulating supply scale with the adoption of their product.
right.
So if they're sustainable and something less, persistently sustainable, shift that.
Yeah, so the need of the token, you know, when they exchange tokens to play, that'll increase more games on the platform. That'll keep increasing. So they release it in unison with adoption. That makes sense, man.
Yeah, yeah. They're asking the first on the scene. So like your 4Ks and all those remaker games, they're all trying to do the same thing. Whereas they have the biggest first mover advantage. They're the first ones to market. Like they're already doing their own games now.
Yeah, it's wild, man. I like that. I like the idea that they've already got games, right? So you're not just investing, you know, just like it's not random, you know what I mean? Like you could invest in this, you know, there's something already there. So I like Gala. The other one, I think this is an infrastructure play, is Ultra. I think you need to invest first in infrastructure and then unique protocols for me, anyways. So that'd be like Chainlink would be the Oracle infrastructure protocol versus, you know, a data query protocol like the Graph or API 3. For me, I'd rather get the infrastructure protocol, like the top level infrastructure protocol, and that would be Ultra. So Ultra for gaming is going to be essentially on-chain version of Steam, and the idea is they've already got a ton of partnerships like AMD, where they're, hold on one second, I made some notes here, I'm forgetting some stuff. So like they're already partnered with AMD in the sense they're going to distribute games to their customers and redeem on Ultra. The games will vary in genre and a good mix of AA and AAA. They have a big first-person shooter coming out soon, and it actually is like a proper, it's borderline AAA. Like it looks really good if you look it up. And then again, indie titles. So pretty much they're partnered with AMD, which is good. You know, that shows that there's going to be some transition to on-chain. The model for Ultra is they're basically charging half of what Steam charges. So for distribution, Steam they cut about 30%. Ultra is going to be 12. So what they're doing is they're allowing game studios to keep more money, and they're encouraging them to go on chain, which is it's achieving two things, right? It's incentivizing these AAA development studios to do blockchain gaming, which right now we need because we don't have enough really good blockchain games. They're mostly pretty 2-bit and weak, and you know they're not that. Sorry, one moment, let me shut that off. yeah, don't really have that much excitement on chain right now. So that'll be a big incentive for development studios to start building on chain with Ultra. So 12% versus 30, you keep more of what you make. I mean, it's human nature. You're going to want to take that deal eventually. And like Eddie said, you got big studios that are starting to dabble and invest in blockchain gaming. So that's a big deal. The other one they're partnered with is Theta. So they're powered by Theta. Ultra users can seamlessly watch and interact with top streamers on their favorite games, creating highly engaging user experiences. Atari is another one. So again, like a very classic gaming studio platform. So one of the oldest, most recognized in gaming and video game industry. They teamed up as well with Ultra, and they're going to be sharing communities and services. So there's going to be a hybrid console with Atari as well, which is really cool. I think Ultra is going to be a really good buy at a certain level here, 5 to 3 cents. That's going to be the level I'm targeting. One sec. So caught a bit of a reaction off this, kind of like a deep crab, or no, just a crab, and it got a bounce over here, 23 cent. So I'm thinking this is the reactive zone, 11 to 8 cents. That's basically right here where everything bottomed, and then it pretty much formed a higher low with a double bottom. So it's like a hybrid structure here, and then took off. Just did a nice parabolic run. So I think this level, also based on the volume profile, this level is going to get a lot of action once it hits this zone if we capitulate 11 to 8 cents. So let me just get back in here. And then if that fails, your bottom on the lower bound is going to be like 5 to 3 cents, which will be in line with the private sale. So again, that's where the sell pressure would fade away. So I think you're pretty low risk. Once you hit 5 cent, you could just buy and hold this coin. And eventually it's going to be big enough infrastructure play where if you want exposure to gaming, why not go for the infrastructure play as opposed to like UFO or one of the other, independent, smaller gaming protocols. So I would take Ultra. Your upside is pretty strong. Your all-time high was 250. So if you're buying at the private sale price, you have an 83x. So that's a really good upside. And again, you could buy a really high volume of tokens once it gets there, right? Compared to everyone who's top buying up here between 238 and 231. So anyone that buy and held, they're wrecked. Like these guys are gonna be just like a suicide hotline, man. Their boys on like suicide watch. But this is the area where I see value, 5 cent basically. They have a massive total supply, but like Eddie was saying, you got to incentivize streaming other people's content, like the live streaming they're going to be doing. You got to incentivize, I guess, the assets market, tokenized assets. There's a lot you got to do. So that 27% float, like Eddie said, it's nothing to be worried about down the road as adoption curve grows. They're going to be adding in the circulating supply, and that's going to get absorbed by demand and value extracted, right? So here's your graphic for what the token unlock schedule looks like. Again, this goes up to January. This is an old one. That's the CTO, the Lorax. This guy's got the toughest mustache. I've never seen a more beautiful mustache in my life. Just want to caress that mustache, baby. But their roadmap was updated like a month ago. So they've added a unique marketplace. Again, they're going to, like, this is all about like Fortnite where you have these assets you can buy, in-game assets. And I think there's going to be, between esports and live streaming and in-game assets, there's such a massive economy there. And Ultra being the infrastructure play, I think we'll have good exposure to it. So if you want to see in detail, you could just check the updated roadmap here. Theta's another one. Again, this was, I think he was like the co-founder of YouTube, if I remember, that created Theta. So they have a certain level of domain expertise, and they've already rolled out quite a bit Like Theta is not one of those projects that is going to turn to vaporware and just fade away in the bear. This is one that I think they're actually, because of the amount of funding they have, they're going to grow a lot in the they're going to develop a lot during this bear market. So I think Theta is going to give you good exposure to what I would call a blue chip gaming infrastructure protocol with really high upside. You know, at its peak it was 1588. I'm targeting these ranges, 20 cent to 18 for my early entry, and then DCA down. But it's a very defined levels on the way up and down. So here you go. So here's your bottom support level right here. Basically 7 cents to 3.6. So that's there. The way I would do this is I would do 40% of my allocation on entry 1 and then 60 on my bottom entry, with stops just below each one in case either of them just fall apart, you know. Exits, these are areas, reactive zones on the way up, that if we do get a full proper bull market, people will be doing profit taking in those zones. So just keep that on file. All-time high, pretty high, so it has a 441x from the low here, 3.6 cents. Again, this is very ambitious, assuming that it goes rock bottom low. I don't think it'll get there. I think it'll go somewhere in between here and maybe 6.9 at the lowest. I don't think it'll get there, but if it does, and it has anything in semblance to the run it just had, this is probably the largest upside out of all the coins that we're looking at today. So I think Theta is one that I think people are sleeping on, and if you get in at the right market cap when it's bottomed out, this could be a really good upside. Again, total supply 100% on the market. This is like the Bentley of total supply. You can't get better than this. So for me, this represents an asymmetric risk where you're not going to get dumped on, and you have a really high upside with a potential disgusting low side entry. So for me, this is my benchmark for the perfect entry on a token that in a segment of crypto that's going to grow the most in the next cycle. So Theta. Sandbox I'm not as bullish on, but it's here just because it's tradable, right? There's very key reactive zones, 16 to 22 cent, and then 3 to 4, which would be still multiples of the private, which is why I don't like this coin, just because people got such preferred pricing on the private sale. So even though I have these numbers here, these are just reactive zones based on the data of the chart. But it doesn't mean that that's where it's going to find a floor or base, you know. Well, actually, floor. Because this is all hype driven, narrative driven, you know. And if that hype dies and never comes back, this could be one of those, you know, old relics of this cycle that we never hear about again. So we'll see. I don't think so, though. It's just they've built out their metaverse already. There's no reason why it would die, you know. But this is the area where the main value I would be entering at 3.5 cents to 2.8. And again, they had a very low private sale, so be careful, because even at 3 cents, this is still like substantially lower, 600% lower than what you would be buying at. So you got to be careful with that. So that's a risky one compared to Theta, which is very low risk comparatively. And again, they only have 41% in circulating supply versus 100. So if I'm creating a hierarchy of investable coins, Theta is way higher. This would be like a 9, as close to a perfect 10, and this would be way down at like 4 out of 10, you know? This is jokes. I'm just doing this as like a bit of a flex with Luna. It was still priced above 100 when I made this, but I left it on just because I want to flex. Entry 1, I had it was over 100 at the time, okay? And I was saying, you know, like $5.50 to $5 was my entry. Just because the parabolic run was stupid and it broke a parabolic arc. So I was looking at the mean reversion play, and this one was the only one that made sense, under 20. Like I knew if it lost 20 on Luna, it was going straight to here, and it did, but just a lot faster, bro. And then this is my entry too. Back then, 57 cents based on the chart, right? So this is just pure classical TA. It has nothing to do with the failure of the algorithmic stablecoin, but it's purely just the TA I was looking at. I probably removed it from the list at some point. But yeah, anyways, I was just left it on, whatever. This is from Lord Fariz. It's his meme. Rip. So Cradle, I have 10 to 8 cents. That's an area of value for me. My entry 2 is 3 to 5. And I know there's probably people on the call or in our group that's not going to be happy about that, but I'm not here to like tell you what you want to hear. I'm here to help people make money, including myself, you know. And for me, I just don't like the I don't like the fact that a lot of stuff in the tokenomics are not overt and obvious. You know what I mean? Maybe it is disclosed and I'm just missing it, but there's certain things that I just don't see within the tokenomics schedule. If I buy at 3 to 5 cent, I think it's fairly asymmetric again. Like there's a lot of upside, assuming it goes anywhere near all-time highs. Because in that case, you have a 326x. I doubt it'll get there, but I have a feeling that there were some early investors that got these prices between 3 and 10 cents. It's just not disclosed, which I don't like. IDO was 22.5 and 50 cents. They've already been unlocked and released. We've also pinned below the 50 cent mark on Credo, so anyone who held to 50 would have sold prior to the 50. So that's gone, but the 22.5, maybe they all sold off as well, but they could still sell off between now and then. Either way, it's such a small percentage allocation for 22.5, it won't even matter. I don't like the venture round was unconfirmed. They didn't say what the allocation to, I forget the name of the venture firm, Cirrus Capital or something like that. But they didn't disclose what the allocation was in terms of how many tokens and what price they got them for. And it pisses me off because if you look at that company, Ceras Ventures, C-E-R-A-S Ventures, every project they've invested in has failed. Every single one of them, well before this drawdown began, was already down 90% with just non-stop sell pressure. So it tells me and the terms aren't on CryptoRank either. So it tells me the terms they secure on their funded deals are very favorable to the VC, and they're at the expense of retail, which I don't like. So that was a big flag. And also they're not, like their tokenomics schedule, I've seen 4 or 5 variants of it and never one source that was exact. Like they're not the same, the ones I've seen, versus the one I showed you guys with Near, where you have a live update with annotation showing the distribution to everyone who receives tokens. Big difference, right? The cycle 886 was at 180. Obviously, we're multiples below it, so that's irrelevant. They have an extremely high total supply, and they only have, 8% low float circulating supply is horrific. This is why our boy Crypto Freeze made a meme account for Credo. But the idea is this is just it's pathetic, you know. The amount of emissions, whether you scale it over 50 years or 10 or 5, the amount of emissions, unless they have an exponential adoption curve, will never absorb the amount of emissions they have. It's just you need to start extracting utility from it today. So I'm watching on the sidelines to see what they're doing. I'm paying attention. For me, they're my big bet on institutions needing custody, allowing them to enter crypto for DeFi. They have competition, but like Fireblocks was heavily funded by 3AC, Three Arrows Capital. So I think that's a mess. They probably had a big liquidation event and drawdown, and there's like speculation they might be insolvent at some point. So that would be the direct competition to Credo, and then you have Coinbase Custody, which is another competitor, but again, it's centralized, and it's not like DMPC technology, what these guys are doing. So I think the protocol is unique enough, and it basically touches on all the pain points institutions have, but I just don't like the tokenomics. So I want to see where this ends up. And if it ends up in an area like this, then I have an area of value where I would roll the dice. But if I don't get this price, I don't care. I'm not investing because I would rather just wait and see. And if people make money with it, that's great, man. Like, I'm not hating anyone for investing it or making money. I want everyone around us to make money, but for me, it's the opposite of, like, the asymmetric risk is to the downside on this one right now. If I see, adoption curve growing, then the upside is immense. So I'll jump in. Aave is another big one. No one talks about it. It's weird. Like, this has been the number one TVL DeFi protocol for since inception, but no one talks about it. It's consistently got 10% of the entire TVL of DeFi. So if you look at the DeFi perp chart, this shows the full market cap for DeFi. 10% of that goes into Aave. So it's such a big gorilla for DeFi that if you believe in DeFi and you think it will have a DeFi 3.0 and it'll actually get institutional adoption en masse, then this would be your bet. There's no reason Aave shouldn't be your bet. Why invest in these shit protocols like Clearpool that are basically scamming retail? Like, they're doing uncollateralized loans where the only party at risk is you, the lender. The institution borrowing from you, they're using trust rank. They don't even have to post collateral. So if they forfeit on a loan, or like one of the pools, the permission pools you enter, there's no recourse. They could just run away with the retail's money. So I don't like protocols like that. Aave is, Aave has been battle tested, and even on the drawdown, like if you go on DeFi Llama, you'll see the total DeFi market cap has drawn down insane, like really bad. But that's what happens, right? You get a liquidity crunch when you go into the bear, and then everyone's they're trying to shy away from risk on assets and then move into stable assets at the moment, or move it into commodities if commodities is doing the opposite and going up. But Aave would be my bet on DeFi. It's always a top 2 DeFi protocol by TVL. The founder, Steny Kulichov, he's also an angel investor, and he's invested in 50 plus DeFi protocols. So basically, betting on Aave, you're betting on that founder who's putting his money where his mouth is, and he's investing in all the other ancillary DeFi protocols. So I like that. He's got skin in the game, and he's putting his own money in it. Like, he's not one of these predatory founders that are just basically taking money and then they don't care if their protocol goes to vaporware. You know what I mean? He's actually heavily invested in DeFi, so that's a good signal to noise ratio for me. The other thing with Aave, when the total DeFi market cap was about 250 billion, Aave had a 14 billion market cap, which represented 5% of the total DeFi locked, right? More recently, it's dropped to like 45 billion in DeFi, and they have 6.5 billion of that market cap, which represents 14.5%. So it's basically they've consumed 3 times the market share while the entire market cap of DeFi dropped. So that tells me that people are cycling out of, or they're scaling out of weaker DeFi protocols they don't believe in, and they're piling into Aave instead. So they still want to get a return while they're DeFi yield farming or whatever, but they're more risk averse, so they don't want to take these protocols that promise 20+%. They're okay with 5, which is a good sign. That signals to everyone in the marketplace that Aave is the one that the average participant in DeFi believes in the most out of all of them. So top 2 DeFi protocol, it's consumed 3 times the market share while the overall market cap of DeFi drew down by about 10x down. So for me, those are the big like signals I'm looking at. Current DeFi, okay, I already went through this. Oh yeah, the other thing was they have Aave Arc, which is their institutional pilot. So the idea is they piloted this to 30 institutions. Let me pull up an article here. Yeah, so they launched their institutional version of Aave for DeFi, giving 30 financial institutions access to private pools of liquidity. So this is kind of like allowing TradeFi to dip their toes in the water of DeFi and get a feel for what their custodianship is like, and how they do their KYC AML, and how they just basically how it flows compared to TradeFi. So I think it's a great idea. Like they launched it, it's kind of a pilot right now, but if those institutions are enjoying it and they're getting a return higher than they would with TradeFi and they feel secure, when the market turns around, they're probably going to 10x their investment in DeFi. And then you're going to see in rising waters, all DeFi protocols will come up. So I like what these guys are doing, because my big bet on the next cycle is institutional adoption. So I want as much exposure to protocols that are inclined to create institutional adoption, and this one's probably gonna be the biggest one. They also had a $1.1 billion ecosystem fund, and it's ready to deploy for any ecosystem initiatives or building during the bear. So it's just sitting there. Like they have a war chest of 1.1 billion ecosystem fund just waiting. So if anything, they could care less where the price action goes in the bear. They don't really care as much what happens. They know they're going to be around on the next bull market. So for me, if it draws down and it gets to my levels where the market cap is just diminutive by comparison, so if I go here, Aave, so let's see what the market cap is right now. Yeah, so it's 850. It was way higher when their TVL was like 18 billion locked up. It was way higher. But the point is, if this comes down to like 500 million or even lower, for it to be the benchmark protocol at 500,000, if DeFi is going to explode, this is a real asymmetric bet, And they have the $1.1 billion war chest to really build during the bear. So for me, it looks like a really good option. I think it's one that I'm going to invest in, not with a big portion, but for a large cap, it looks like a good option. What else did I leave out? Again, it's a major Ethereum protocol, so it's built on Ethereum, and it's going to be, it has like deep two-way funding connections with Uniswap, ZK Sync, and Aavegotchi. So, it's, if Ethereum is going to succeed or grow, they're probably going to, like, this is the child they're going to protect. You know what I mean? Aave is one of the protocols that was most successful for them, at least for DeFi. It was number one. So I think they're going to protect it at all costs. And I think it was called ETHLend too, if I remember. Like, it was originally called ETHLend. I'd have to check it out. But yeah, and also Grayscale is looking to create an Aave trust. Currently, it's Grayscale's second largest DeFi holding. So I'd imagine if they create a trust, the adoption, at least the institutional adoption, will start exploding after that. You're going to see a lot of major holdings come in. They also teamed up with Curve Finance and SushiSwap and Cello. They call it DeFi to the people. It's basically a $100 million DeFi initiative, so to grow the whole ecosystem, which is kind of cool because they partnered with who are effectively their competition, but they did it for the greater cause, to grow the whole ecosystem, which is like in the spirit of crypto, you know? Instead of like TradeFi always being lizards and trying to cut each other out and like, you know, corporate raiding each other, they're actually partnering and trying to like lift up the whole ecosystem, which is kind of cool. It's a nice contrast, right? What else? What else? Oh yeah, so the big one I like. So I'm going to be investing a lot based on narratives. They're developing a Web3 social media protocol. It's basically they just launched it actually, like a big campaign about it. What's it called? I'm trying to remember the name. I think it's called Lens, if you look it up. Yeah, I think it's called Lens, but look up Aave or Steny Kulichev Lens, where it's like their pilot for decentralized social media. And what it is, it's infrastructure. So it allows decentralized app builders to build any kind of social media on their on Aave or on Ethereum, basically, right? So like it's not limited to one thing. Like it's not like a TikTok social media app. It's more of an infrastructure for decentralized social media, which is kind of cool. I think the next big narrative coming in this next cycle is going to be like the censorship bullshit that Twitter has, banning the president of the United States, banning guys like me just for trolling. Like just too much liberal influence is shutting down, you know, like these big tech companies are just shutting down people with a diversity of ideas and opinions. And I think people are moving toward, like they're recognizing it, so they would be more inclined or willing to move toward a decentralized social media. And there's already been pilots for that, like with, so they call them like conservative right-wing apps or whatever. There's a few different ones, I forget what they're called, but there's a few out there. And I think if you get a decentralized version where nobody controls anything, everyone is pseudonymous or anonymous, then, you know, people could just be themselves and they're not being monitored, they're not being policed online. It'll allow the exchange of ideas to have less resistance. So I think that there's a need for it, and I think the fact that Aave is doing it and building it on Ethereum is just showing their tentacles are in everything, not just DeFi, but they're trying to build out crypto as a whole, you know, which is good. They also have major investors, including Framework Ventures, Parify, Uniswap. Important to note, though, they Three Arrows invested in them, so they were, you know, I would attribute, there was a major drawdown recently, and I would attribute a lot of it because it was more than, like the drawdown was a lot more than other protocols that 3AC invested in. So I have a feeling they had a big allocation, and you know, they probably liquidated a lot of 3AC's position on the drawdown. So I'm not saying it won't come down more, but I feel like it was so fast, this drawdown for Aave, that a lot of the downside is capped right now, you know. Why is it not on my capitulation buys? Huh, did I erase it? Anyways, I'll have it in the charts on the slide deck, but the point is it drew down, it outperformed to the downside while 3AC was going through liquidation bullshit. So I have a feeling that was a big part of the drawdown, and that they're probably stabilized right now until the next big drawdown. And I'll be looking for this floor. 32 to 25 and then 10 to 20. IDO price unknown. Again, it's a DAO, so I'm not sure what the mechanics were on the IDO or how it was a fair launch or whatever, but the upside is immense. You know, the all-time high was 668. So if you're buying in at the low end, $20, you know, it's actually more than that. How many X's? I think that was a conservative. You're probably looking at 50 to 60X on Aave. Minimum 25, I would say, which is really good considering it's a large cap. and it's a pretty sure thing that it's going to be around on the next cycle. You know, this one won't fade. Total supply 16 million, which is low, and their circulating supply is really high. So this is also suggesting that whatever allocation 3AC had, majority of it is already liquidated, which is good. So I don't think you have that much crazy downside or net sell pressure coming in at this point. I couldn't source the proper tokenomics, but here's like the closest I could find. So that's in there. Curve, this is just trading. Like this says, I don't believe in it. I think it's shit. It's like a very crusty version of Aave, but the entries would be 47 to 32 cents and then 10 to 5. I would actually lean towards 10 to 5 just because they've had a lot of FUD on you know, Celsius vaults and like Luna. It was actually a trigger on that UST pool they had, I think. So there's a lot of, I mean, if there's still contagion out there, I'd imagine they have more exposure than most, just because a lot of major protocols are using it. And it's, I don't know, I just feel like it's a bit of a busted protocol, and Aave would be the better version of it. And you look at it, it's trash. It's like 2-bit. I know they were going for a certain look, but the user interface is trash. And I don't know how institutions look at this and go, crypto is a serious thing. Like, this does not look like a serious protocol. It's crazy. But anyway, that's just me. Everyone has their preference. For me, it's just trading. Like, I would take that with my first position, stop maybe at like 28 cent if I bought 32, and then re-enter at 5 to 10. Don't have the ideal price, not easily available. It's already way below their cycle 886. There's only 22% circulating supply. I wouldn't even bother. Like, out of 33, this is probably the weakest option or least investable. NFT, I'll run through these quick. It's not my like area of expertise. I don't know enough, and I don't trade NFTs enough to really know anything about it. But the infrastructure plays are going to be Immutable X. ApeCoin is just like a cult coin. So if you're going to trade an NFT coin, my target on Ape, you guys already know, it's pretty low. It's negative. I was calling these levels down here when we're still way up here, like $20. I was already screaming this thing's going to zero. I just don't know that it has the real utility to make it. But it does have revenue streams, right? Like, you have holders that are loyal Ape holders. They're never going to sell their Ape. They want to be a part of the community. So if there's like Ape events like NFT NYC or whatever, like an Ape cruise, they're going to want to be a part of it. So as a community token, there is some utility there long term. Just overall, the utility as a whole for crypto in general is pretty shit. So for me, I would prefer it to go to zero, but whatever, man. These are my entries for Ape, just because it was an airdrop. So there's no, like, the holders that got the airdrop. It was an egalitarian airdrop where basically loyal holders that, you know, owned their base C for a while, they got that airdrop. It's like free money. You could dump it on the market, right? So we don't know if they held. If they held, they're insane, because like there was obvious signals up here when we topped, right? Like, if you break this into 4 hour, there's an obvious double top, right? On this line right here. So if you held all the way down, you just don't understand classical TA. But at this point, it's an airdrop. You know, like, it's free money. So there's no reason, if the market's capitulating, for them to not claim their free money on the way down, which is why my thesis is Ape is going to zero. And I'll buy it, but I'll buy it for like pennies on the dime. I'll buy it here, like maybe 5 to 10 cents, and then just run it up based on it being a community cult token. Your max, yeah, bro. You could also, from what I understand, you have intellectual property rights with it, right? So like if you open a coffee shop based on your ape ID, you own the IP. So it's like you're licensing it with your ownership of the token, which is kind of cool. I know I hate on ape, but like that's actually kind of cool, man.
It is like I hate the code too. I'm not exactly sure on the use case of it because it's going to relate to metaverse and things. But one of the main pitches everybody has in the pitch deck right now is, oh, you're going to be interoperable with someone right now can log with your personal user identity on your phone.
It's kind of cool, man. Like I'm not gonna lie. I'm hating on it probably because I don't understand it. You know what I mean? Just like fucking grumpy old man screaming into the air, into the sky. So I feel like a grumpy old man right now, bro. No, but like it's kind of cool though, because like if you own the IP and you could launch your coffee shop, like let's say you have a nice build to suit coffee shop on the marina in Dubai or like in San Francisco on a strip. It would be kind of cool. Like other ape holders or anyone who's like tech forward, they might be like, "Oh, what's this cool new non-franchise coffee shop over here?" I don't know. There's like some like you do a clothing line. You probably do a whole bunch of shit. I'm not really exploring it enough.
There's some big names though that also want to get involved in that too. Lots of people wanting to get involved.
I saw that at the and they previewed it. I think at the NFT NYC. They did like a live concert or whatever. No.
Yeah, they did. I'm gonna go and check that out.
Oh, it's kind of cool. Like to me, I don't know. I just don't get it. But listen, man, Andreessen, they're funding projects that are community driven. Like right now, they're doing one called Friends with Benefits, and the idea is anyone in a social circle that has the same interests. Like let's say you're a football fan, like you love soccer, you love footy, and you just you they create a community about soccer or about football, and maybe they do road trips. You know what I mean? And they have like a European road trip, and they just go to different clubs and watch them play or whatever. I don't know. There's like cool community things you could do, like, and like there's no limit. There's no cap. You could create a community for anything. It doesn't matter what it is, right? You could be in like a shoe club. You could be in like fishing. You could be in, like I said, like soccer. You could be into like yoga. You know, like there's a billion things that you can apply to that type of community token. So it's there. I'm just being ignorant, but either way, I'm only buying this at 5 to 10 cents just because I know that that sell pressure is always going to be there, man. These guys that got the free airdrop, that's free money. They could dump it whenever. If they haven't already dumped it, then and they're just holding it, then BTC goes to like 14K. They're getting rid of it, man. So I'll wait for them to just get rid of their tokens, and then I'll buy. It'll be like Cardano. I'll just wait for it to base. Like when Cardano comes down to like 2 to 10 cents, it's a cult token. They have like 75% of it goes into staking. It's the kind of token that people will blindly buy it without even knowing anything about crypto at all. So it was my entry. It was the first token I bought, and I knew nothing about crypto. So that's how I'm treating it. This is more of like a cult token, community token. It's worth buying, but it's only worth buying at the right price, you know. So 0 or 5 to 10 cent. And then you look. I don't think it'll ever get to that upside again, but who knows, right? And then you have the tokenomics are very clear. I like that. If you go on the site and you just go to the bottom, it shows. Or is it on this page? Yeah. Yeah, it's like very clearly defined. This is what I love to see when I'm researching for my big buys. But yeah, 62% ecosystem fund. I like the distribution, that it's majority of it is going to the ecosystem. Yuga Labs and charity. I hate charity. I think that's a stupid scam. 14% launch contributors, and then base founders. So that's reasonable. Like the tokenomics outside of the airdrop are reasonable. So that's why I'm looking at it like maybe this is an option at the right price, you know. This one's horrific, looks rare. I mean, or is it this one? Yeah, it is this one. So like you look at their tokenomics on July 9th, this is coming up, the first major one, they're gonna unlock 10% of supply. And then they're unlocking every 3 months on these exact dates, 4%, 6%. It's just gonna be a dump fest. Like it's already been one of the biggest dump fests I've ever seen. So let's go into looks. If you zoom out, like this is just horrific. It's probably down like 98 to 99% from the top, but let's see. Even where it is now, 95, but it went down to like 97, 98. And then the problem is like the cliff is still steep right now. Like they're still gonna be unlocking major percentage of their supply coming up. And this is gonna go right all the way till January 2024. Bullet in one day. So July 9th, 50 million tokens unlocked, 10% of supply. Like look at this, this is horrific. So I guess what I'm saying based on the tokenomics, this is a horrible project. It's kind of like a use case I wanted to present you guys, where you have a great project in the sense of it's a competitor to OpenSea with a really nice user interface and a really nice experience too. But the tokenomics are just wrecked, you know? Like there's no way to rescue this project. It's not changing it. Oh, my computer's just slow. Yeah, anyway, this is going to be a competitor to OpenSea. So the good thing is, you know, you have collections like Moonbirds, Mutant Ape Yacht Club. So you have some Zuki. Anyways, you have a very familiar interface. Like this is very familiar to anyone shopping on OpenSea, and it's a competitor. The valuation is still, you know, 147 million. Again, the unlocks are going to be horrific. So this is probably going to a penny or even less at some point. That's why if I'm going to buy, this is the only entry I could justify rolling the dice. And I would do it in a window between the unlock dates. So if I know these are the upcoming exact dates, what I would do is let this unlock happen and then wait for the sell pressure to subside. And then I'll snipe at 1 cent or 5 or whatever, and then ride a quick trade up once it presents. But like, there's no rush. You have to be greedy with these type of entries because you're effectively buying a distressed asset. You're not buying a blue chip. This is a piece of trash. Like this belongs in a dump based on how they formulated tokenomics. So that's like an example, like a case study on poor tokenomics. And the giveaway is the schedule, the breadth of the unlock, 10% in 1 day. And this is fine. Like the fact that a good portion of the supply already got dumped, but that's why it's been down only, you know, because it's been this way from the beginning. So at some point it'll level out, but that's like late 2024, you know, or 2023. Yeah, it's still like, no, here, 2024. So they're still gonna have one last dump fest at 6%, but hopefully it has like OpenSea level type of adoption by then. Now the DEXs and AMMs, this one a lot of you guys already know. I'm big on Woo. Again, I think it's great, the protocol itself, but the tokenomics are very poor. So it's something I would only be interested in at the right price. My entries are going to be 4.6 to 6 cents and then 2 cent to 2.8. Main reason is the IDO price was 1 to 2 cent. It has exposure to 3AC. They had a major allocation in the lead round, seed private round allocation, for which was a total of 540 million tokens. So they got a good percentage of that. It's a linear unlock until August 22. So for me, I'm tracking August 22nd. I'll throw it on my chart with an alert. So when we hit like days after August 22nd, I want to see if they've dumped. If they have, then it might be an opportunity to jump in. And then it's 3% inflation per month calculated on the circulating supply. So 2022 would be the ideal date to start considering it. Until then, you have contagion with 3AC, plus you have major unlocks still until August this year. So I wouldn't touch it till then, but when they finish dumping, if the price goes to these levels, I'll be buying. And then I'll roll the dice with a quick pretty tight stop, you know. And again, they have a very predictable unlock schedule. So 25 million tokens monthly over the next 6 months. Very linear, reasonably small compared to what the total supply would be. And again, the team allocation is 20%, which is exceptionally high. So I don't like that. 20%, and then advisors and seed have a pretty good amount too. So you have to be careful. Here it is, 20 on the team, token sale, advisors, so yeah, just be aware. This is the other thing to know. 10% of the tokens were sold in the private and public sales. These tokens have been fully vested and distributed. Another 10% sold to seed and equity round investors, so 20 total. And they're vesting over 1.5 years till October. So you could buy in August, end of August, and then look for a rally after that, or you could wait till after October and let the final big dump happen and then jump in. So that's kind of how I'm playing it. I'll be watching more carefully in August, but I'll be more serious about laddering in end of October. The other one is like long-term buy for me is Injective Protocol. So again, this is a layer 2 DEX built using Cosmos SDK. It's the most familiar, most common one, but it's allowing users to trade anything. So you could trade spot, perpetual swaps, futures margin, derivatives, even Forex. You could trade everything. So the idea is it's like a Robinhood competitor, which is good. It's giving blockchain exposure to everything, including derivatives, Forex, all that. And it's with zero gas fee, which is great. So the thing right now, I don't know if you guys saw it in the news, Robinhood was in trouble financially. So our boy Sam Bankman-Fried was trying to help them, I guess, or buy them out. And Robinhood stock pumped like 12% that day. So right now, if Sam buys Robinhood, I wouldn't be buying Injective, because like Sam's just gonna, he has such a big war chest. He could squash Injective. Like this will be nothing for him to, it won't be competition. So that's like my only criteria for these entries are if that moves forward and Robinhood goes to Sam, then I won't be touching it. But if he doesn't get it or they don't come to terms, these will be my entries, at least for a quick swing trade. 8 to 18 cent, 64 to 95. I think it's sitting at like 120 to 130. Yeah, it's like 130 right now. And it's basically retesting the 1272. So if it was going to bounce, this would be the level it should bounce. Like the wave structure is so perfect on this. This is where it should bounce, but we'll see. Either way, I won't touch it till here, or at least till we have closure on the Robinhood deal. The exits are clear. The all-time high is really high. So you know, at 200 million market cap, current market cap, if this goes to like 100 or 110 million market cap, and you get to buy at these low levels, you get 168x. You know what I mean? Actually, it'll go on under 100 million market cap if it goes to this range. And then you'll have 168x. So you have, it's a long-term investment. This won't happen overnight, but I believe the protocol is going to do really well. It has good exposure to all trading markets. What else? Yeah, they do cross-chain derivatives trading. Their testnet's been around since 2019. So, you know, this was born in the bear market, right? And now they've secured funding, like pretty big funding. So they've already been through a bear market. So this is like light work for them. You know, they could probably do it again and it won't phase them. They probably even have the same development team. So that's why I think of it as a bear market resistant protocol. And they have pretty good backing. Here's a round they raised with Mark Cuban and Pantera and CMS and Hash. They basically raised $10 million round from these guys at a $1 billion evaluation. So that's basically them buying at an evaluation in the future that they believe Injective will be worth $1 billion. So if you go to their current market cap, so this is the current market cap, 84 million. So this is like a low to mid cap coin, but it's a big picture, big idea solution, right? So this is going to have exposure to all trading economies. If this dips to the levels that I'm considering buying, there's a lot of upside, you know. And the fact that they raised 10 million at a $1 billion evaluation means that the big money guys see the valuation going from 84 million. At the time it was like 200 million. They see it going to 1 billion, which means they bought in at 5x the evaluation of the current value. So they see the future value being way higher. So that's good. Like, to me, that's a pretty good signal. Also, they had a 1-year lockup on this round right here with Mark Cuban and Pantera and the other ones, which just finished in April. So they had their unlock happen, which means any of the sell pressure from that round happened from April. So like right here, this peak top. This is what happens every time you get a major unlock or vesting is unlocked. You get a run up leading into it. This is just to pump the bags of you know, the VCs or the major investors. And then you see that almost like a tweezer top right here, and then it just dumps. So that tells me they probably dumped a lot of their tokens. Maybe not Mark Cuban or Pantera, but the weaker investors like Hash, QCP, Capital, they probably got rid of all their allocation at that moment. So that's good. That means a lot less sell pressure and probably more upside. So it'll start looking asymmetric when we hit these levels right here. And this is very definable. Like, yeah, so you got this box over here. So it's basically this back test, spring back test of spring right here. And then you have this lower bound right here. That's where you're probably going to get support. So that's why I'm eyeing those levels for Injective. And then pretty strong upside. 100 million tokens, 65% in supply, which is really good. Here's an interesting one, FTX. And we're almost done, guys. I have like maybe 3 or 4 more after this, and then we'll rip through these. If anyone has questions, we'll go through. But FTX, I have clear entries at 830 to 710. Entry 2, 340 to 316. Very clear exits on FTX. Their levels, I mean, the levels on this one are very well defined. Like you could see, there's no noise. This kind of looks like BTC's triple top, and then except it doesn't have a confirmation top there. This is just like, dude, its correlation to BTC is incredible. This is like how we bottomed last summer with BTC. It's the exact same Wyckoff. and then it launched the M, perfect 886, or it was like a Gartley at the 786 with a double or a type 2. Yeah, like right here. So there's your Gartley and there's your type 2 retest and then run. But very clear levels on FTX. If it does draw down, here's your main level. That was your first high, double top, back test, and then went parabolic. And then your next level here, 340, 316. All-time high, 87. I think this could go to triple digits with ease. But even if it doesn't, it's like a very low risk, not as high a return, but it's like he's bailing out the entire crypto asset class right now. Like he's already bailed out Voyager. He's given them like what, a revolving line of credit. I think it was Voyager. I'm just trying to remember. Let me just look it up here. Anyway, I can't find it now, but he was rumored to be bailing out Voyager. What was the other one? Galaxy Digital, I think, and even BlockFi. So, and now he's trying to buy Robinhood. So he's essentially becoming like the Carl Icahn of crypto. He was a corporate raider. So if you look up what he does, yeah. So Sam was trying to bail out BlockFi and Voyager. It's crazy, like $250 million revolving line of credit. And he basically, because Voyager had big exposure, I think, to Luna. And like total, I mean, Sam could fund all of crypto, right? So what he's doing right now is similar to this guy, where he's going to distressed companies that got caught up in some kind of contagion. And he knows they're not liquid. He knows that they're at risk of getting sued and like complete bankruptcy, like just destruction. So he's giving him lowball offers. He has nothing to lose right now. So he's going to BlockFi and saying basically, hey man, you guys are fucked. You guys are going to jail. Like all your users' assets are gone. What I'll do is I'll replace dollar for dollar every penny they lost on your protocol, but then you got to pay me back, and it's at like some unfavorable rate. And then the collateral is your company. So if you can't pay back all of the user's assets plus interest to me, I take over BlockFi. And then it creates a scenario where it's almost unattainable. Like there's almost no way that indebted company could ever pay. And then the corporator, in this case Sam, comes in and he just jacks their company, you know? Here he is, innocent Sam. Same as this. These are the two same people, right? He's looking for insolvent crypto firms and he's pretending to be the good guy, behaving like the Fed bailing him out, but then he's just taking their company for pennies on the dollar. So to me, that sounds like he's going to make a lot of money in this bear market. He's going to be the biggest beneficiary of the bear market. And all those bottom buys he buys, all the companies, the insolvent companies, if he rolls them into one company or he restarts them however he sees fit, once the bull market comes, like he could cover the float of all the developers and like payroll and all that shit. And then once the bull market returns, they'll be ready to go, ready to rip, and then he'll like 1000x his investment, right? Just by taking their company on pennies on the dollar. So the more money he makes, the better off his exchange FTX becomes. And they've already been sponsoring stadiums, running major ad campaigns. He's given $1 billion to Biden's campaign. So he's basically like, he's like a lobbyist now, right? He's lobbying for crypto, but mainly for FTX. And that tells me that FTX has staying power. Even in a climate with regulations, FTX is going to be the biggest beneficiary of it. And they're going to crowd out all the competitors just by lobbying with the current government and by creating awareness through, you know, their advertising, its Super Bowls, they're owning stadium property rights on stadiums. And like everything they do, um, in the crypto economy. So I think they're going to be the biggest. I think they're going to go parabolic on the next run up, I think. But they got to do work on their platform still. Here's their tokenomics. I'll let you guys read through it on your own. So there's a big parallel with what he's doing here. KuCoin, I'm only putting it on here because it's show of strength during this market. Like, its drawdown was way less than other exchange tokens, and it's been pretty resilient. And it's a better user experience. Like, I use strictly KuCoin, and I don't have many options in Canada, but the point is it has a very good user experience, similar to Binance. So the people that use it, they have an affinity to use it. They're not going anywhere. And the more people that stay and the more sticky your exchange is, the more transaction fees you accrue along the way. So I think, if anything, you can put it up there in the top tiers of exchanges now. It's all a matter of whether they're going to go insolvent. Like, I don't know if you guys saw this today, but GCR, who's like a god level trader, posted some real cryptic shit today. Happened to me in last cycle, don't let it happen to you. Your funds are not safe on the vast majority of exchanges and protocols. My biggest losses in 1819, exit scam by insolvent exchanges, unscrupulous actors, squeezed hit BTC, KOX, BaseFX, EMX. The incentive of various actors in the space change as liquidity dries up. So he's, in a real cryptic way, he's telling us, get your money off exchanges. So I'm a little bit worried with KuCoin, right? Because it was a darling of this cycle, but if people aren't using it right now and they're not getting those exchange transaction fees, what if they do become insolvent, you know? So it's just something to think about, like moving your funds off exchange if you're not in an active trade. And if they do make it through the bear market, based on user experience, there's no reason this couldn't do a run like FTX did in the last cycle. Like, for KuCoin to go to $80, $90, I don't see that being a problem. It already cracked 30. So if you can buy at these entry levels that I've identified on the chart, way down here, then you have a really strong opportunity. This is wrong, I gotta change that. But even if you only go to 28x from $1, that's a 28x. Sorry, $28 at $1, that's a 28x. So I gotta update that. So it's not bad. Like, for an exchange token, that's pretty good. One of the first things that run, from what I understand, in a bull market, when you transition from, you know, accumulation into a bull market, is these, these launch pads. So the idea is to get into one or two really good launch pads and then just cash out when it's like toppy. But Avalanche did really well. Again, this is the native launch pad for Avalanche. And the thing is, it's the VCs bought in, or the IDO was at $3, so it's already wrecked. Like, there's no more, I can't imagine being any more sell pressure. Look at that, it's just a giant inverse V, right? So now we're kind of bottomed at a logical level right here in this box where you got this pin bar, but there's no reason it can't go down another 50, 60, 90% from here, right? So I'm waiting for it to really truly bottom on a capitulation. You don't have to worry about IDO guys being up 100x still, so there won't be additional sell pressure when it hits. And the upside went to 22, right? So if you do buy for pennies on the dollar, or a fraction of a penny on the dollar, you have insane upside if it ever goes near that all-time high. And then you got to look into the token economy. Like, for instance, what was the one I was using? Fuck, I can't remember it right now. There's a launch pad I kept buying into. Poly starter, no, something starter. I forget what it was. But I would trade the coin for like 70% each time because you had to own a certain amount of their native token to get an allocation on their whitelist for new launches. So every time they had a new launch, people would buy the token just to run the price up. I mean, just to get in on the new launch they were going to whitelist for. And then if they got it, they would keep it until the launch was over. But if they didn't get the whitelist, they would sell off their token because they're like, I don't need this anymore. I didn't get the whitelist. So if you have a token economy like that, where there's like a way to absorb the supply, then that's when you would enter into a launch pad. So look into Avalanche. This would be one that I'm considering. There's a few different ones. Most of them are pretty sketchy, to be honest. They're just cash grabs. But this one is like fully endorsed by Avalanche. Like it's their native. I think it's more reputable than the other launch pads. That's all I'm saying. So if you had to own one, this would be the one for me. And I think there's pretty good upside, but the circulating supply is pretty low. So be careful. The last big narrative for me is privacy. One sec. So the last big narrative I'm looking at is privacy. One sec. And NIM is a privacy infrastructure for the internet, basically protecting every packet of data on the network and application layer. Sorry, one sec. Goddamn grainy green drink choking me, tapping out. So for NIM, it claims to monitor, it basically prevents data leakage and monitoring on the entire network they're using, including actors like the NSA. So even the NSA will not be able to extract metadata that you're using on their chain. So this is the kind of basically it's the kind of level of privacy that prevents these type of risks, right? Like you want your data to be private. You don't want that data to be extracted and used against you with big tech companies that like use Facebook ads to target you just because of your interest. There's a lot of vulnerabilities when you're on centralized apps like that. So NIM is allowing this privacy layer where you won't be losing your data. What it does, basically, they have a mixed net. So their main net is called the NIM mixed net, and it's basically encrypted data is mixed in their mixed net amongst all the nodes, making everyone's data indistinguishable from each other. So it's like just a giant soup, and you're putting in ingredients and mixing it all together. No one really knows or could pinpoint your data. It's like too lost in the soup, you know? So these type of anonymous economies, I think, are going to be a big narrative on the next run, the pseudonymous and anonymous economies. And I think that narrative is really going to catch fire in this climate where we've been getting, rinsed by our governments. And, the more they push to the CBDC, where they're trying to, monitor you more and more, the more we got to push back. So for me, it's more than anything, like obviously I'm doing it for profit at the right price, but I also want to support protocols that protect our data and are created in the vein of why we have blockchain technology, right? So, this is kind of like an early stage Monero or Tornado Cash. You want to invest in a privacy layer or a privacy protocol. This would be one option. The problem with NIM is that it has a really high total supply and the float is so low. Like this is the worst low float I've seen in my research. Less than 7% circulating right now. And I get it. They have their token economy, with adoption this will change, but it's still so low where, what's the market cap on NIM? Yeah, it's like 24 million. So one whale could move the price, right? But I honestly think people are just going to sell into strength right now. The one good thing with NIM is the IDO prices have already been breached. So your first IDO price was at 50 cents. It's already found resistance on it. So anyone that held all the way down to this IDO level, they're at a loss now. They have no incentive to sell, so that relieves that bit of sell pressure. Then here's your IDO2 at 25 cents. So I'd want it to breach that level. It made a double bottom here, but it looks weak and it's making a lower high. So I'd imagine this will eventually breach. And then it's inverse price discovery, right? So for me, I'm not desperate. There's no sense rushing into anything right now, especially a startup like NIM. I like the use case. I like the fundamentals. The tokenomics are poor, but the entries I'm targeting are well, there's only one entry, 5 to 10 cents, which is going to be from even the lowest IDO price, 10 cents. So even on the high end, it's still a 60% drawdown to 10 cents. And then to 5, it's like 79% drawdown. So for me, that makes sense, then it's kind of worth risking it. But again, this is one that's so early stage, this could potentially, I don't know, I'm just saying it could go nowhere. I'm not saying it's vaporware, the tech is good if you read up on it, but it hasn't proven itself yet, and it's brand new, so this could go to zero. So be careful. Like my advice with any of the tokens I'm investigating today, just do your homework. Don't rely on my TA or my entry points. There's always going to be associated risk in this downtrending market, Again, I couldn't find proper tokenomics. Here's a good explainer video. And again, I don't like the distribution. 20% to the team, 36.5 to the backers. This is horrific. This is absolute dog shit. So for me, it's just a swing trade. I'm not holding it. If you could find what the emissions are and like when the major vesting schedules are unlocked, then go ahead and share it, because I couldn't find anything proper. Long term, I think it'll do well if it survives, but like it's at risk of potentially not surviving, just because this is going to be an absolute dump fest. I'm very bullish on Algorand. These are my entries, 16 to 10 cents. And it's a very clear area of support if you go into the chart. So here was a point of inflection. But here's your bottom. So here you have a Bulkowski structure, 1, 2, accumulation on the third bump over here, and then it started going parabolic. So for me, this range 16 to 9.5, I think a lot of big wallets will enter there, and I want to enter with the big wallets and not roll the dice here, because I still think it could go down more. And it's in a very steep, discernible downtrend. So like they had issues with their tokenomics, but they changed the emission schedule from 4 years to 10, so it's a little bit better now. Originally it was up till 2024, but they've extended it to 2030. It's a lot longer than I thought. So it goes up to 2030, so it's gonna create some relief on the emissions, but in terms of the scope and scale of the project, this is one of the more ambitious blockchain projects. They recently bought the IP, from what I understand, from LimeWire and Napster, which are Web 2.0. They were leading Web 2.0 protocols. So Napster was a music sharing service, and LimeWire was like BitTorrent, basically stealing free files online and shit like that. So what they've done is they bought the IP for both, and I imagine from what I've read that they're going to be just moving the IP on chain and creating, a music sharing service that is on chain and like a file sharing service, whatever. So this will have competitors. Like there's Audius is one for music. It's like the on-chain version of Spotify. But Algorand, now they have the IP for major Web 2.0 protocols, so I think they're going to do a lot. They're also testing, like right now, they're doing a test, like a proof of concept for a CBDC in Marshall Islands. So there's rumors that if the US ends up launching a CBDC, they'll be using the Algorand blockchain to do so. And I think this tiny island at Marshall Islands is like their proof of concept. And if it works, and you could prove that their country could run on chain, that they'll probably get like 2 or 3 other sovereigns to run their economies and infrastructure on chain. And then that'll give further proof or confidence to take on bigger economies that have more sophisticated infrastructure. So long term, like if you wanted to take a 5, 10, 20-year bet, it feels like Algorand is one of the more ambitious protocols that has potentially the most upside for me. And again, it's all relative, right? You might interpret it differently than me, but it just seems they're a very ambitious project. And these are like pretty big deals, running the first country or island on a CBDC or like a test pilot. So clear entry, all-time high 256, not the greatest upside, but if you buy it at 9 cents, it's actually higher than that. The IDO price was 240, so this is wrecked. This is like 240. From here, that's like 6x, 7x. Yeah, it's 8x from here. To go back to IDO price, it would be 8x. It's insane. So this is wrecked, which is why I'm thinking a lot of the IDO investors have already dumped, And then with the expanded emission schedule to 2030, it just makes sense that there'll be a lot less net sell pressure in the immediate term. It'll be like spread out over decades. So this is kind of like a set it and forget it long-term bet, whereas a lot of the other protocols I'm betting on are more immediate return and higher, faster return. Whereas Algorand is like one where it's like a money market fund or fixed income. You just park the money and you don't think about it. You let it come to you eventually. So I wouldn't even look at my Algorand balance closer than 10 years. Again, just more details about tokenomics. Another Web3 protocol I think that'll be pretty good use case is Helium. Eddie knows a lot about this one. Our boy Tyler, he actually got a rig, I think. Very good protocol, strong use case. The idea is, it's a decentralized hotspot. So, you could be just walking around downtown New York, like uptown New York, let's say, and someone has a Helium miner, and they're basically giving you a hotspot where you can connect your internet and run off their hotspot. And then they call it proof of coverage. So it's like proof of work or it's like proof of stake, but it's proof of coverage, just to play on words. So you got to have a validator node. You got to stake whatever coins you get, and then as a miner you get a reward every month, like mining rewards. And then you basically, from what I understand, you only need 50 to 100 to cover a full like metropolitan city. So imagine you have 50 to 100 Helium miners running in a major city, like Dallas, let's say, like Austin, Texas, right? Everywhere you go in the city, you have free internet. You just jump on their hotspot, and you could basically run an entire city using the internet generated from Helium. So it's like a cool Web3 application that would crowd out the centralized internet providers that have been ripping off everyone for so many years. Like I know in Toronto where I'm at, we get jacked. They actually went to court against telecom company here because they were overcharging us relative to every other um, country. Like we're paying something like 5 times what anyone else is paying for our phone bills and our internet on our phone. So I think something like Helium, once it gets going, it has the ability to get that high network adoption and basically consume the entire economy around it. Like there won't be any number two. It'll just be Helium, and that's it. That'll be like Kleenex, but for hotspots. So I like it, and the barrier to entry to be a miner is pretty low, from what I understand. I can't remember how much it was. It's like 600, 700. Eddie might know better, but it's
Are they trying to build out Wi-Fi too?
yeah,
And also, what if the coins, other than mining it, isn't that going to so the use
it's a
the
good
use of
point.
coins so like when you have proof of work, you pay out the miners to prove that they can solve a computation, right? They have proof of stake where when neighbors get stake pool. Helium's a proof of data, so they pay out for the data that you basically use. That's the purpose of the coins.
So it'll be maybe like pay to use the network or pay to use the Wi-Fi, and you can't really block it or anything.
Yeah, there's something like that. Tyler's the one who's really big into it. The Helium miners do contract back and forth, especially with their
Yeah,
mining
because
gateway.
you get a reward.
Yeah,
Yeah,
I've never seen that before.
yeah. Tyler just got his like 2 months ago.
dude, that's like a year and a bit ago, man.
Yeah, he put those in March. Yeah, March of 21.
Oh, that's crazy, man. That's insane, dude. But it kind of shows you like the demand, right, to be a miner, no? Or it could also reflect like supply chain disruption too, right? You never know, but
A little bit of both, yeah.
because I don't know what goes into it. Like if semiconductors are getting waxed right now and we can't get one, or like cars are not being shipped out because of this shortage, I don't know like how that would impact miners. Like is it the same type of supply chain, same
Yeah,
incongruency? Yeah,
there's only so many plants that are making chips and semiconductors, so there's a shortage there. There's a shortage here.
makes
And
sense,
I
man.
and I would imagine that the buying power is very influential with any miner in this technology too.
Mm.
In short,
I like it as an idea.
I would love if I had some stake points in my coins.
But Wojak's right though. Like if you're being paid in the native token, and it's like any other miner, right? Like look at the BTC miner Compass that just went under right now. Their position, they entered like at 40 grand. They're basically liquidating half their stack at half price. Like they're
They
wrecked.
they have a use case of wanting to pay each of the users like they're going to hold it
Yeah, it's a good point, man.
use case versus you know buying the motivation to mine it, motivation to sell it, motivation to buy the coin.
And stake it and keep it off the market, off the supply until they grow to full capacity, like 50 to 100 miners per city. I mean, just the big picture idea is very big. Like if you can run cities on helium rigs, but that would take a lot, man. Like for adoption to get to that level, that would take some time, a lot of effort. So I get what Wojak's saying though, like the added sell pressure. If you're paying them in the native currency or token, these guys are making a living off it. Like let's say you are making like I don't know what the average is, like 3 grand a month you could make on a couple miners. I can't.
Oh no, it's really low. They make like between 5 and 15 dollars per month right now, I think, on adoption.
Oh, okay. Yeah. So you're not making a living. It's not like a fully operative Bitcoin mining operation, right?
Yeah, it's just something you throw in the corner of your house, and
Yeah.
it's a little bit of extra bottom line.
Yeah. So I don't know. I don't know. It's a cool idea. It's novel, right? Like it hasn't been. There's nothing like it. So for me, I'm looking for opportunities with novel ideas that have the right narrative. It's something I could see myself using. You know, like if I'm overseas, let's say you're traveling, you're in a place where you're just confused. You can't read in the native language, but you're looking for Wi-Fi. It's kind of cool that you could just like grab their data right there on Wi-Fi wherever you're at without having to like go into a restaurant or whatever. I don't know. Like it's interesting.
Yeah,
And
definitely is.
and the price action was good. Like on this run up, this thing went to $60. And people were buying the miner. Like there was a lot of it's the classic Airbnb problem. You need hosts for there to be guests. Same thing here. You need miners for there to be usage and adoption. So the fact that there was like a strong, um, I guess, response in the mining community, like people wanted to become a miner, it shows that there's a market for this, right? And it ran it to $60. So I mean that's pretty good, man. Considering where we're at now. What's the price right now? It's just decimated, like under 10 right now. But it's at a very interesting level at the 886. One tap, two tap, holding. This is actually one of the most bullish structures right now. Structurally, this wave structure printed, like this is the full life cycle of price action in one wave structure. It's unbelievable, man. This is a god level bat. Holy shit, I gotta show the boys this, my harmonic buddies. But yeah, anyway, this is really a strong chart. It might not ever get to my buy levels, but if it did, these would be my greedy buy levels, right? I doubt it'll get to this one, but in the right climate, I think it could get to this one, 243 to 187. Will it ever get to all-time high? Probably not. But if the adoption curve kicks in, yeah, there's no reason it can't. It's the only one. It's the only one. There's no competition. So if you have, like, that's another way I'm placing bets on this bear market. If I see protocols that have no competition, like they're not saturated segments of the market where you have 10 options, that would be another variant of a asymmetric bet. So Helium would be one of those unique Web3 protocols. Total supply 223 million, 45. This is like down the middle, but again, it's a fairly immature market. Like it's only been around a year. So at the end of 2 years, I don't know how that's going to swell up. I'd have to double check the tokenomics, but that's all right. It's not that bad. Arweave is another one. Sorry, Eddie?
No, I was gonna say, increase in 401c
Nice, dude. Yeah, that's big, man. Anything Andreessen invest in, I'm in. Like long term, they're gonna do well, because the thing is they have support. When Andreessen invests, they're not just, it's not cash investment. Like they're giving them guidance on how to scale. So for me, I like it. It's like a strong signal for me. Arweave has a lot of connections. Like I'll let you guys read about it, but basically this is a major part of Web3. Everyone's going to be doing data storage on Arweave. It's basically replacing Filecoin. It's going to be like an updated, better, snappier version of it. And they already have so many partnerships. So if you read up on Arweave, this one's going to be strong. It's also like a hedge fund held coin. A lot of hedge funds are holding it. It's not reflected in the most recent Masari snapshot, but let me see if I have AR here. But this thing is very impulsive. Like when it goes up, it goes up crazy. This one went up to $91. The drawdown is like it's 1/10, 10% of what it was then. But it means if it gets in this zone here, there's pretty good upside for a large cap. And considering how many partnerships Arweave already has, this one's going to survive bear market. This one's going to be around for sure. I'm pretty confident this one's going to be around. It's below its 886 cycle reset. But the upside, if you buy in here at 168.54, so this would still be in line with like some of the other like lower cap coins on the list that have pretty good upside. So Arweave is another one. Fuck this one, step in. I just put it here because it's like a very it has a very good average true range, so the volatility is high enough on this one where you could trade it both ways. It's very impulsive. When you catch it at the right moment, you get a good trade in. GMT. I don't think it's ever going to go to this level again, 417. But it's like a very tradable coin. So Near is doing a version of Move to Earn 2. If you guys want to look into it, I think the Near version is going to be way better. Also, I believe in the chain, so I think they'll have the right infrastructure to get it off its feet. But if you just want a tradable coin, you know, this one's probably going to zero at some point. I think this one's going to end up vaporware. But if we stabilize, these would be the entries. And then I don't think it'll go anywhere near these all-time highs or exits, but you could get it like 30% move, you know. The private, this was a scam. If you look into the tokenomics, they got it for a fraction of a penny, and it's been a dump fest. LTO, a lot of you guys already know about this one. I like it because of the use case, but also because it's 100% the supply has already been distributed. So there's no additional sell pressure now. Anyone selling now when the price is already down is at a loss. So that's why I like this one. To me, once we hit a floor and we base, there's only upside with this one. No risk. So I'll show you in a minute. Get rid of these. So here it is, LTO. Okay, it's not 100%, but 98% circulating supply out of the full supplies out. So this is like jackpot, perfect. Use cases. So let's go through real quick. So they have basically clinical trials. So they're basically putting biomedicine on chain. That one's useless. What's this one? This is new. Casino. Decentral identifiers. I'll look into it. I haven't seen it in a while. Land registries, so like property rights on chain. So it's immutable property rights. Countries that are fucked over, you know, you'll have immutable property rights. So the government can't just rob you, and you'll have like record that this is in fact where you live and this is your home. You're entitled to it. Wallets, so basically like a decentralized identifier. So again, this is more third world application. They have a version of DocuSign where it's basically like encrypted signatures on chain, so you can't like fake or falsify info. It's like validated on chain, which is really good. So there's applications in law that you can use it for. Also, they're doing land registry. So, well, they're not doing it yet, but they're going to be, where you would have deeds or titles to homes on the chain, and you know, basically you would eliminate the land registry service. Everything could be done via smart contract, and again, it's immutable, and you have property rights. So it's like very good exposure to very practical use cases on LTO, and with 98% in the circulating supply already, there's very little downside. My levels are going to be 2 to 2.6 cents, 3 to 3.6, and these guys have been around. So let's see how long they've been in business. I encourage you to look at interviews with the CEO. He's a very smart guy. So they've been around since January 2019. So here's another one that was born in the bear market. So I think based on that, based on the team, based on circulating supply, based on how they've been rinsed already, there's a lot more. It's another asymmetric risk where you get in at the right level and you just hold, and this one can go up really nice. If it goes back to all-time high, which is 90 cents, you have, I mean, it's not even including these levels, just here at this level, 37x. So it's probably like 60 to 70x. Yeah, 60x to, if you buy it, not 60x, what am I babbling about? 45x if you buy for 2 cents. So pretty good upside. But again, caution, it's a low cap, 32 million. So very low cap, very risky, could go to zero, but I doubt it. And the last one, Orion, I'll let you guys research it, but it's essentially connecting chains. It's doing, what do you call it? I'm losing my words right now. If you're doing calls and inquiries on chain, these guys are interoperable. One moment, Orion. So they have a lot of big partnerships. So all the centralized exchanges, DEXs, swap pools, they're connected with Orion, and any queries you do online, the partnerships they have, you're doing it through Orion. So it's like an infrastructure play for all the exchanges, AMMs, that sort of thing. And the idea is right now it's already destroyed. Like price is already pretty low. 125, considering it was like 26, I think, at a peak. Yeah, 30. So if you could buy at these levels, which I identified, basically there's no support below here, 145 to 133. So what I'm doing, these are stink bids right here. These two, these are just low, like pennies on the dollar type bids, right? You have nothing to lose. I mean, you could still lose, don't get me wrong, but it's such a low risk area to buy once it gets this low. So I'd be willing, considering that it went to $30. But again, look at review the tokenomics, because there is still going to be some sell pressure. And I think the CEO or CTO stepped down recently. So I have to read up more on that, but that's usually not a good sign. So this isn't a priority coin, but it's a pretty good infrastructure one. And this isn't enough, like considering how long it's been on the market. It's pretty low float. Last thing I want to leave you with you guys is this cycle. A lot of the big winners of this cycle won't be around for next one. So Phantom is one that I think the consensus is a lot of people think Phantom is going to go nowhere and the next cycle it'll end up going to zero. I do too. But the point is, if you identified the narrative and you knew that this one was going to get traction, it went up 58,000% from, you know, the early buys over here. So if you invested $1,000 at those lows, it would be worth $500,000. 10,000 would have been worth 5.8 million if you just bought at the right level. So what I'm saying is a lot of the protocols we looked at in this session, they're not even going to be around. Like a good portion of them won't be around. I mean, I did my best to find the bear market resilient ones that will probably be around, but like Stepin's not going to be around. Like there's a chance this one won't be around, Orion. Point is, there's going to be a fleet of new protocols coming in that you haven't even heard of or seen a post on Medium about, and they're going to do incredibly well. And those are going to be the next Phantoms. Those are going to be the next AVAX. Those are the ones that are going to light it up in the next bull run. So the idea behind this is to keep researching, just don't go away. Like crypto is here to stay. All this bullshit you see in the press are coming from people that want to get cheap Bitcoin, right? These are paid shills that are doing the inverse so that they can get the price down so that JP Morgan and their clients can buy it for really cheap. It's for Fidelity 401ks to fill their bags with $3,000 Bitcoin. It's for Citadel to buy for $6,000 and lower. all this is bullshit. When you got the big VCs like Andreessen pumping 4.5 billion into gaming, on-chain gaming, there's absolutely no reason that the smart money would be throwing that kind of money into crypto and this going to zero. So the idea is stick with it. Like, keep researching, jump on Twitter and follow the big protocols coming up, because the next phantom is coming. You just haven't seen or heard of it yet. And that's where the real exponential gains are going to come from. The list that I gave today, these are like 20x's, 30x's. This is like, dude, this is 58,000%. Like, this is absurd. 588x. This is, you need one of these in your trading career or investing career, and that's it. You're good. You could retire. You could live off that. You know, you could turn this. Like, imagine you put 10,000 in Phantom and you sat on 5.8 million. You could take a percentage of that. Just the this is loose change, 885,000. That loose change, you could skim off that, live on the 5 million, reinvest the 885 on stable yield, you know, anything you want, just something that helps you sustain every year. And that 5 million you could bank and just, it's like security the rest of your life. So keep researching like Tsunami does and myself. You might run into the next big protocol. Don't let these motherfuckers take your money and your opportunity from you. So the last thing left, we got to capitulate. We got to go to 94.24, and then I'll start bidding on Bitcoin. And that'll be the first investment I'm crowding into. Then I'll run it up to whatever number, and then start investing in all these shit coins and vaporware. Anyway, guys, hope you guys enjoyed the slide deck. I'm gonna make sure to post and give access to everyone on it. If you guys have questions about any of the coins, reach out anytime. And thanks for jumping in, guys.